Fix. So, yo, what is up for everyone watching this on the YouTube replay? If you're on the YouTube replay and didn't make it live, if you leave a comment, a ticker symbol of a stock you want me to analyze, I'll leave you an interesting little analysis of that stock if you want me to, if you didn't catch it live. Appreciate y'all being here. It's Thanksgiving week next week, and there's only 2 full trading days, so it's going to be a bit of a short week, but usually, statistically, all these weeks, futures already green, 0.5%. The market, overnight market doesn't open for 10 more minutes, so we'll get to that in 10 minutes. But the futures already looked, are already up 0.5%. So I expect a big little rally and boost as we go up. But statistically, during Thanksgiving week and just through New Year's and December, Christmas, there's just no like trading activity. The traders aren't there, and there's just no sellers on the order book really. So statistically, that's why there's always a Santa Claus rally, because of just psychology. But anyway, check this out right here. Let me give you a quick portfolio update, then we'll get back to it in another 10 minutes as the market opens. But this is our Robinhood portfolio, known as our dividend-only account. Actually, we won't go over this portfolio. I actually want to get straight into some stocks I find interesting. Here, I'll go ahead and get straight to the top of the watches here. Some of stocks I think you should put on your watches. Hey, Suzuki man, let me know what you think about this stock. You like Watsco, right? And good to see y'all. What up, Tommy? Yeah, hey, Tommy. What's up? Yo, definitely give me some stocks. In my stream earlier today, YouTube literally glitched and didn't show me the chats. I was wondering why the YouTube chat was so dead, but it was because YouTube didn't connect it. Okay, so I'll get into that later. But anyway, if you're looking for an HVAC play that's a cheap valuation, this is MCore right here, a 23 PE. That's a pretty fair valuation. And, that's a 23 PE after it's had some pretty impressive stock price appreciation. And actually, their current PE is a 23. The forward PE is a 21, so they're expected to grow their net income. But yeah, the United States Mechanical Construction Manufacturing Facilities, they're an MEP company. Yeah, there's the mechanical, electrical, building. So yeah, pretty cool company. And check out the growth here. The revenue is up by 16% year over year. And the net income, actually, the net income only grew by 9%. So that means the net margin did fall. That actually might be why the stock did gap down from its all-time high level, but it might be appropriate. The risk to reward at a 23 PE for a company that prints this kind of net income. Check this out. If you average it out here, they're making like 300 million of net income a quarter. Let's go see how much the dividend costs. They do pay a dividend, and the dividend only costs literally $11 million a quarter. So they're making 300 million of net income a quarter, and only the dividend costs only 11 million. That tells me there's so much future, significant room for future dividend growth, because they're literally spending 100 mil, 200 mil a quarter on stock buybacks. So I think this one's going to be very shareholder friendly. You can see they raise their dividend every year. Very low starting yield, but very low payout ratio. That's the kind of stock I like. So MCore is pretty interesting. Another one is Uber. I actually really like Uber Technologies at their valuation. 25 forward PE. Everything here is headed in the right direction. Their monthly active consumers are at a record 189 million, up from 161 million. That's the metric you want to look at, their actual monthly active consumers. But check out their delivery revenue, like Uber Eats. It's at a record of 29%. First time ever at 4.5 billion. But they print money. If you go to the FCF, which is free cash flow, easily over 2 billion plus a free cash flow quarter. The net income's around $1 billion in net income a quarter. So yeah, Uber's interesting at this valuation. A great software play, I think. So hey, let's check out PRIM here. What up, Aaron? JVM, Call of Duty. What up, dude? Heck yeah, we'll check out AMD stock. Yeah, Watsco. I saw Ryan buy that one. Watsco is very interesting as well. So here's, I haven't heard of this stock. Primrose Services. Let's see what this company does. So they're a $6.3 billion company. The stock has done phenomenally since 2019. Right before COVID, this was a $20 stock. Let's go see what this company does, because I don't actually know. Or let me just go to their website right here. Okay, so engineering and construction, fabrication, maintenance, replacement, and engineering services through utility. Maybe we can click on their website for a quick little glance. Infrastructure, energized. Well, let's actually go check out the money they're making, because analysts, or the stock is happy reacting to their earnings. Let's see. So yeah, energy is 68% of the revenue. Yeah, look at that growth rate year over year. The revenue's up 46%. That is some significant growth. Let's check out the other business. Their utility business is also at a record. It's never been over 700 million before, and it was 737 million, up double digits year over year. So yeah, check out. This is why the stock is gapping up on earnings day so much. Check out what the analysts are expecting. That's the orange line. What they expected 1.84. They beat like crazy on revenue. They beat like crazy on net income and beat like crazy on EBITDA. So no wonder they're doing so well because they keep consistently beating by a huge margin on their expectations. So that's what's impressive about PRM. Yeah, the net income is nuts. Basically 100 million net income this quarter. That's after they paid 38 million of taxes. That's really impressive. So what's a forward PE? So, oh, wow. The PE right now is only a 23. So that's a super interesting name there. Actually, that one, yeah, that one's actually real cool, Tommy. So let's pull up AMD right here. I am a shareholder of AMD, full disclosure. We used to be up over 100% on them. Yo, full disclosure, we have not done good at all. We're only up 8.6% all time. But AMD is one I do like as just a cheaper way to get exposure to Nvidia. Because if we look at the market cap of AMD, AMD is worth $330 billion. But if we go to Nvidia right here, this is why I bought AMD over Nvidia. Nvidia is worth 4.4 trillion. So for you to double your money on Nvidia, they have to be worth 8 trillion. So just for the law of large numbers, I'm trying to go for some of the AI ecosystem beneficiaries. So AMD is one that I do own. They're super expensive. The risk reward doesn't look great still. 60 times next year's net income. There is some good growth coming from this company because OpenAI is plowing orders into AMD chips. Okay, so I'm chugging my water here. Okay, but let's go look at their metrics right here. So 60 times next year's net income. They're right now trading at 100 times net income. So net income is supposed to grow 40%, which is reasonable because they've had some adjustments. But yeah, 46% of the revenue is the data center. Then they have the client and gaming, which is like their GPUs, I'm guessing. Wow, 72% year over year growth. Now that's something to look into. Hold on. So, PC GPU market share. Yeah, 14% market share. It actually went down a little bit, but that's for PC GPUs, not like GPUs for data centers. But yeah, they're making good net income. Oh yeah, really good balance sheet on AMD too. So I do own this one. I'd maybe, if I wanted exposure to AMD, maybe I'd buy like the smallest amount today, but I wouldn't buy the bulk of my position at this valuation yet, at this risk to reward, because the valuation is still a little high there. All right, let's see here. SUP, MU, Google, Microsoft, Nvidia, Amazon. I agree. All those Mag 7s are great, never sells. I own most of those. I got Amazon, Google, Meta. Meta's cheapest Mag 7 at a 20 PE. Suzuki, man. Yeah, slow growers equal low multiples. Do you know if they do stock buybacks? Ooh, you can check that actually just by doing the, or actually, I'm not sure if you're talking about this stock right here, but here's how we can check. Here's how you can quickly check if a company does share buybacks without having to go into the cash flow statement. Because if you go into the cash flow statement, you just go down a little bit. You just go to the net common stock issuance. Oh, we can see that they're actually slightly diluting you every quarter. So no, they're not buying back any stock. But another way to tell this, you go to the net income growth rate and compare it to the EPS growth rate. You can see the net income is up by 61.9. And the EPS is up by 61.6. So again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio if they diluted you or bought back stock. So but sometimes when a common way you'll see is when a company buys back their own stock, it makes the EPS go up, which makes the PE ratio go down, makes the cost of dividend go down. It gives you more ownership in the company. I love buyback stocks. Actually, I exclusively look for stocks that do share buybacks. Every single one of these companies does billions, and I'm talking everyone on the screen here does billions in buybacks a year. So yeah. And dividends. This is my dividend-only portfolio, but you could also call it dividend buyback portfolio because all these stocks do buybacks too. We also have a Roth IRA. By the way, the market opens in 2 minutes. In 2 minutes, the market's going to open, and I already saw the futures. I expect the S&P to go up 0.5%. Well, I checked that like 30 minutes ago, but we'll see how the market opens in about 2 minutes. So stay tuned for that. Let's look at one more stock over here. Can you say that again? Hey, what's up, dude? What up, Nate? Sorry if I'm missing some stocks here. I got a list here. What up, Nick? Ron? Hey, remind me to get to SoFi and Grab and Wix. But I'm streaming on YouTube. If you missed anything, I talked too fast, I apologize. I'm also streaming on YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. You can like replay it over there. Okay, and like rewind. Do you think the semi cycle will start to slow in 2027? So what we're seeing is a little weakness. We saw this with Nvidia to the growth rate of late 2026's numbers for Nvidia's EPS and their growth rate. So it looks like the growth is going to not for a while, but the late half of that year, that's when we expect to slow down. Okay, let's look at one more before we see the market open. And honestly, this now has the overnight market as well, so we should see the overnight market on this app too. We got the overnight market in all three of the apps now, so pretty cool. Okay. Wix had some disappointing earnings. I love them because of their vibe coding play, but there was a big miss and it disappointed me. Uh, they're the only like publicly traded vibe coding play with their base 44 acquisition. You can literally, and there's so much competition for it now, which does scare me a bit. But you can like generate an actual good website just by telling it a prompt. But they've bought them and merged it with their Wix ecosystem of 300 million plus users. But yeah, they beat on their revenue, but a big miss on their net income. And that was real. If we go to their net income, it went negative this quarter. And it really did. They lost 7 million of profits. They make interest on their cash, so that narrowed it down a little bit. But that base 44 acquisition is the one reason I absolutely love Wix. Not Actually, they're also an international play. Only 55% of the revenue comes from the US, then Europe. Actually, what we're seeing is I actually read this in the morning, so I researched, not how true it is, but we're seeing like companies move from like Shopify and go to Wix actually, or something. I don't know. But anyway, pretty cool. What's the forward PE? The forward PE probably is expensive. So actually, no, it's not. Wix, I mean, still little, but not 38 forward PE on Wix. I'm actually going to re-put them on the watch list. If they fall another 5-10%, I mean, it's starting to look real attractive. But yeah, 38 times next year's net income, not too shabby. Okay, let's see here. Hey, Professor Pumpkin's in the house. He said PMRTY. Wait, PMRTY. I hope I can find this stock for you. Okay, we can find it. So Pop Mart. Oh, and the market just opened. We'll check that out right after this. Pop Mart. This is a $34 billion company. It looks like an ADR, some Hong Kong stock. So we'll convert the currency from Chinese yuan to USD just to get a better understanding of this. So their brand development, design, and sale of toys. Well, look at that. The revenue from 2023 to 2024 full year just rocketed up higher. Yeah, mainland China operations, and then Hong Kong, Macau, Taiwan is the other half of their business. So let's see what the actual numbers are. Again, do we get quarterly numbers? So yeah, they only report it on cumulative, and like annual, or in halves. But the growth rates are real. Like comparing it to the first half of 2024, first half of 2025, these are insane triple-digit growth rates, and that's why that one's actually might be worth looking into. And this is in USD as well. For the first half of this year, they made 650 million, a 4x increase from the first half of 2024, a fortress balance sheet. I wonder what they own. I mean, what I just clicked there. Okay. It looks like they just started paying a dividend maybe. It's an investment holding company, engages in product designing of sale of toys. I mean, what kind of toys are they selling to make that sort of money? Oh, like this is their actual website. Hold on here. I guess little collectibles. It's trying to ask for my cookies, and I'm not gonna. Maybe they created Labubu. I don't know what that is, but okay, that growth is good. Let's go check out the market. So let's go to Robinhood real quick. Yeah, we're up 0.68%. No way. We'll wait for this to load in the new charts, but let's go check out the S&P real quick. The SPY. Yeah, up 0.31% right now. The QQQ is up 0.45. So that, tech heavy QQQ is up 0.45. This is good. Actually, let's go check Bitcoin really quickly because that's kind of like just a good dude. Robinhood is so annoying. They've removed Bitcoin from being the top of the crypto page. Like, why would they do that? But okay. Well, Bitcoin's kind of flat right now, but stocks are doing good, which is good. Okay. Wow, is Google really up 1.8%? That'd be, I think, a new all-time high on Google. So congrats if you're a shareholder. Then Meta's up 1.13. I think they're a decent buy. Actually, they're a good buy right now. Uber, I think, is a good buy. EME is a decent one too. Hey, and again, none of this is financial advice. I'm not an expert. I sell nothing. I have no course book, nothing like that. I'll never follow you, DM you. All right. Yeah, hey, no problem. No problem, Tommy. Call of Duty. Accelerate. The homie said SAIC. Oh, yo. IDEX does us. Oh, hey, Nick. Yeah, we're going to get to that one too. Oh, yeah. We got to get to Qualcomm after this. We'll look at SAIC. Then we'll get to Qualcomm. Then RBA, Celsius. We'll get to all these. Okay, so I haven't heard of this one before. Science Applications International. $3.9 billion company. That's actually It's a decent sized market cap, but look at this stock. This has not done too well. Specifically on earnings day, they had a massive gap down and just have bled out ever since. So let's go see what those nasty earnings were. So they're a defense and intelligence company. Okay. But this is kind of the bad news. Let's see how that's growing. So it's negative year over year. No way. So as we can see, the orange line is what the analysts expect the revenue to be. And as we can see, it was a massive miss, which is weird for them because normally they beat on earnings, but this was a massive miss on revenue. There was a one-time adjustment to their EPS. They actually missed on their EBITDA. So there's no way that net income. So you look at, but anyway, I think investors more. Yeah, look at like what's the PE on this company? So a 10 PE that actually might be actually pretty fair. They're making net income, so they are actually making net income every quarter. But the growth looks like it just went negative. But it's always been single digits. 2, 1, 5, 4, 1. Yeah, -8. Yeah, so it looks like they're getting in like recovery phase. Interesting there. I don't know. You get a dividend, 1.74% dividend yield. The fundamentals aren't too good, but they're good to where this risk to reward might be decent. Okay, so yeah, the PE right now is a 10, but they're trading at 12.5 times next year's net income. So actually their net income, according to the analyst, is supposed to fall 25% from what it is right now. Okay, so there's I don't know. Oh wait, $23 billion backlog. Oh, so some more context for this stock that I didn't see here. They have a $23 billion backlog, huge buybacks, I believe, or when they start converting. Oh yeah, let's see. Net income is up by 56%. It wasn't actually, but the net income was up by 56, and the EPS was up by 71. Wait, let's go see how much they're spending on buybacks. Actually, yeah, look at that. You go to the cash and financing activities. If it's negative, that means you're either paying off debt or doing share buybacks. And well, let's just go see which one they're doing. I guess share buybacks. Yeah. Wow. Look at the top here. This company spends $100 million on buybacks a quarter, which they can afford. They're making that. They can afford that. Interesting. Yeah. Okay, Qualcomm right here. This is an interesting royalty company I've been learning. The forward PE is a 16 for Qualcomm. This is, in my opinion, a good dividend growth company. I wouldn't have it as a major size position, but a small percent. I'm drinking my water here. I think a small percent of the portfolio, maybe 3% or something, would be fair to start it out with. But here's what's really cool. Oh, wait, let's look at this real quick. Automotive and IoT, or Internet of Things revenue, grew 27% year over year. Automotive sales reached $1 billion, up 17%. Handset revenue increased 14%, driven by premium tier Android devices. So they make smartphone chips. We can actually see their smartphone chip market share. They have a 26% market share. And here's what's so cool that we found in the Morningstar research here. If you read the first thing here, what did the bull say? Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds many of the essential patents used in these networks. So they're collecting this royalty stream, which is very fascinating. The revenue's growing very nicely. If we go to their net income, they had a little one-time adjustment. They didn't actually lose $3 billion this quarter. This quarter, they actually basically made $3 billion. So was that acquisition related? I don't know. Who knows what that was, but anyway, it wasn't a real thing. But I like this one, and the PE is probably pretty fair. I mean, again, the 32 PE isn't real because they lost a bunch of EPS, but the forward PE is a 16. And look at the dividend. Check this out: a 2.2% dividend. And so they're a nice dividend growth company where you should get 2% dividends and hopefully 4 to 5 to 7% stock price appreciation every year to keep up with the S&P. I'm thinking of selling out of Celsius because they have no moat and their growth rate is mainly based on Pepsi and not their actual sales. Well, actually, I don't know which one to defend here. Defend you selling it or defend the company? I'm going to go defend the company here. Actually, I thought that too. Well, I'll just break this down real quick. Their Celsius brand, when you don't include any of the acquisitions, just the Celsius brand right here, organic growth, not including Alani or Rockstar, just Celsius brand grew 44% year over year, which actually is pretty impressive. And then they also, so Pepsi is now distributing and like manufacturer bottling all their stuff for them, I believe. And or yeah, they're doing a facility. So their net income was impacted by a negative $250 million one-time expense linked to the transitioning of Alani to PepsiCo's network. Let me just go to the numbers right here. So yeah, a lot of this growth rate, revenue growth, is from their acquisitions. So the revenue is up 172%, and on this it says they lost 61 million net income. They didn't actually. They actually made 166 million net income this quarter. And then you remove like 20 million, 30 million for taxes. But yeah. And we can see if we go to, wow, the cash flow this quarter was 330 million. We can see when they acquired Alani last or 6 months ago, they acquired Alani, and Alani still owns 8.7% of the company. So pretty cool. All right, let me go check on the market real quick, and then we'll get back. Oh, I haven't even looked at my Webull portfolio. And no flipping way, Google's actually up 3.5%. I want to see that on the candlesticks here. It's too beautiful. I mean, Santa Claus rally, here we come. That's an all-time high on Google. It's never even been close to 310 before. All-time high is 306. It's at 310 right now. So Thanksgiving rallies here. Statistically, during Thanksgiving, we usually get a rally just because there's no sellers and no traders. Let's see how these stocks are doing. AMD's up 1.5. Do we have any losers? Of course, Disney's down. But yeah, looks like the market is pretty green right now. So hey, expect a green day tomorrow. Hopefully, knock on wood here, didn't jinx nothing. So let's keep going here. Okay, I'm a little behind here on so many stocks. I'm so sorry. Let's get this GTEC. What is that one here? Another stock I keep an eye on, GLW. Yeah, Corning is kind of like Amphenol. Great, like Nvidia beneficiary. Yeah, what is Google doing? Google's going to the moon, apparently. Google's taking over OpenAI. So and I'm not selling any of my Google shares, but here's Greenland Technology. Again, actually, we're not going to cover this name. If you look in the top right, the market cap, this whole entire company is worth $18 million. $18 million. So are they at least making money? So that's why I wouldn't completely dismiss this one, because they actually made $6 million net income. But nothing, I wouldn't, there's so much, I wouldn't trust more than like, not even in your situation, even for my situation, I wouldn't even trust $100 in that name. Like but maybe a super small position, because those financials are interesting. Because they are net income positive, but that market cap is just so low. So here's the London Stock Exchange Group. I didn't know they were public, so that's interesting. So a $60 billion company. Obviously, they're headquartered in the UK. So we're going to convert the currency from British pound to USD just to get a better understanding here. Wait a minute. Oopsie, there we go. So data and analytics revenue, they're in markets, post-trade, FTSE Russell. Well, let's go check out the numbers down here. So revenue, again, I don't think they report quarterly. Yeah, because they're an international stock, they report in halves. But for the first half of this year in USD, the revenue's up 15%, after grew 9, after grew 16. So that's pretty good. The net income has been choppy, though. It looks like the margins have been squeezed for the past couple of years, but they made $1 billion so far this year. If we annualize that, that's $2 billion of net income a year, which if they keep up this same for the next half of the year. But anyway, London Stock Exchange Group, yeah, trillion of AUM, but 1.5% dividend yield. Let's go see how much the dividend cost. So again, actually, we can't really do that because this is in halves, but the dividend cost for the first half of this year is 646 mil, and they made $1 billion. So yeah, 60% payout ratio. That seems interesting name there. And so let's look at GLD. Oh, and Grab. Hey, Grab is international Uber. I really like international Uber. And so here's Corning right here. This is like the fiber optics company that like the cable company that data centers are using right now. Let me see what this says right here. So yeah, their optical communication sales grew 33%, driven by Gen AI infrastructure demand, with enterprise sales up 58%. But on the other hand, their automotive segment sales declined 10%. So that's interesting. What's the forward PE on Corning? So actually, that's not too shabby. A 29 forward PE on Corning. Also, Amphenol has, I think, a 32 forward PE. But yeah, look how diversified that they are. Looks like the automotive revenue showed some slowness. But yeah, if you just go to the operating profit right here, which is what you really want to look at, it really grew 95%. Like, this is great, like basically net income growth. So I I like Amphenol stock more at their current valuation. Actually, what's the forward PE on them? 32 forward PE. I don't mind paying 2 more bips for Amphenol's valuation because I think they're just more quality because they don't have those other weird like automotive businesses. Actually, Amphenol's in the aerospace industry, which I do like. So let's see here. Okay, APLD, Yalla stock. I think that's an Israel software stock. This one's like a super cheap software name. Like, yeah, they're trading at 8 times net income. I think it's because they're headquartered in Israel, but let me verify. Yeah, or Dubai. Okay, UAE. So they're actually headquartered in Dubai, which will just, so I don't know if they pay taxes. Actually, here's how we can check. Well, let's just go see. Key indicator tax rate is 5%. So it looks like this is, they do some business in the US, or let's go check, and they pay taxes there. So market or, no, or I'm not sure the exact breakdown, but anyway, revenues generated from a chatting services. Growth rate's a bit flat, but interesting. Revenues generated from games services. Well, check out that growth. That looks pretty interesting. Let's go see down here the revenue. So, or it says the revenue is only up 0.8%. So it's a bit of a slow grower, 4%, 6%, but they make great net income, 30 to 40 million net income. And they really do just trade at 8 times this net income. Plus, this is like the cherry on top. This is a fortress of a balance sheet. Go to the cash on hand. They legit have $740 million of cash and no debt at all. And let's go see if that earns them interest. So $740 million of cash, and that earned them $6.3 million of interest. So just adds more money to the bottom line. Pretty cool. Are you telling me Google is going to make my rollover IRA go off? Hey, yes, sir. Actually, let me go give another quick update on the market here. We're up 0.86%. So yeah, Google is up 2.9% to an all-time high. Looks like Meta's up 1.1. Meta is one of the cheapest Mag 7 right here. But yeah, looks like futures are really green. Robinhood's up 3, SoFi 2, Palantir 2. Is Amphenol up? Amphenol's up 0.5%. Pretty cool. Okay. Anything update on the Webull portfolio? Nope. I guess AMD's green. Okay. All right, Clear Secure. I know Ryan will be happy about that one. Hey, what up? Shout out to the member Jeff Mack on the YouTube stream. Hope you're doing well tonight. Yeah, Robinhood is having a great day. I love Robinhood as a stock. I mean, I regret every share I've ever sold it. Then I'm not kidding. I'm actually looking to buy more Robinhood if it goes like another 10% cheaper, just like a little bit more shares. Oh yeah, RBA. Let's get. Did we check out this one? RBA. Richie Bros Auctioneers. This is actually a cool company if I remember. This is like an actual auctioneer, like car auction or like stock. Or let's go check right here. Let me go check out their website right here. So I could be wrong. Value-added services, transaction solutions for buyer and seller of commercial assets and vehicles worldwide. So, global partners. So they own Richie Bros, like auction places. If anyone's heard of these, I haven't. But anyway, let's go look at the numbers because that's what matters. It's a niche industry. Like there's not many, I guess, publicly traded names. I don't know many that are pure auction place. But check this out. They did $1 billion of revenue this quarter, 1.09 billion, and out of that they netted 95 mil. Yeah, that's after they paid 60 mil of taxes. So they have a 10% net margin nearly. And they just invested in something big. That's great news. $237 million in something. They doing buybacks. EPS is up. Okay, so they actually diluted you by 5% year over year. So do beware they diluted you by 5%, but that's okay. They're interesting there. Do we get any like AI news on this one? Nah. Hey, what up, Nancy? What's up, Lucas? Oh, DT. Someone said DTST, best/cheapest data storage play. Okay, DTST. Oh, hey, the literal name is data storage. This is a small company. They're worth $30 million. I'd maybe rather go with a PSTG, Pure Storage. Actually, Pure Storage is actually a subscription model play. And check out the growth rate in the middle here of their subscription revenue. Still, let's go back. That's not what you asked for. Let's go look at this company right here. I am very curious. So Cloud First Technologies business. Wait, the revenue, whoa, is that real? So the revenue just plummeted, it's 400,000 this quarter, but it was 24 million that quarter. I wonder if it's going to be 24 million in 2 quarters. So I went to go look at the analyst expectations, and the analysts actually aren't expecting any revenue in the next 2 quarters. But it says they made 16 mil of net income this quarter. They didn't actually. The actual business lost $1 million of net income. So did they like sell an asset or something? No, I don't know what happened there, but or maybe they bought an asset, but the PE isn't real. It says, what's the PE ratio? The PE says it's a 1.9. That's absolutely not true. The PE is actually negative. So if you go to forward PE, yeah, the forward PE also says loss. So there is no net income on that company. Yeah, I completely avoid that one. Hey, S. Lopez, what up, dude? And someone in the chat says, we use Pure Storage a lot. Hey, you're probably one of the subscribers over there. So yeah, Pure Storage has just really benefited from the whole AI boom. I like subscription model companies as predictable revenue. Their net income's still a bit choppy. Like the core business on Pure Storage lost money basically this quarter. So that's why I still don't love this name, but I like that subscription growth. What's a good petroleum investment? Well, there's Oxy Petroleum. There's that one, but they actually just sold their most valuable asset for $10 billion to Warren Buffett's company, which I don't like. A petrochemical play could be Powell Industries. Like 30% of the revenue comes from that industry. MUSA is my oil and gas stock, really convenience store play. I've just been dollar cost averaging into this one. Bought some shares recently. Really cheap company that does massive share buybacks. So, yo, Jeff, if you got a stock you want me to look at, let me know there. All right. I bought GLW because they make Gorilla Glass for phones and other products. Oh, I did not know that. That's actually pretty interesting. I wonder if like Android, yeah, maybe like phone screens. Okay. Where'd you learn how to invest? It's just with time. I've been investing since I was 18, or actually before I was 18, but I'm definitely not an expert. Don't listen to me. I sell nothing. I have no course book, or I'll never follow you or DM you or anything. Watch out for people impersonating me, but yeah. I've just read books, learned myself doing the streams. I've just gotten better at streaming so much every day for well over a year now. So let's go check out this one. MU or Taiwan Semi. Let's look at Taiwan Semi and MU. What would be a good price to buy Robinhood at? Under 100. Under 100. But can you? Yeah. Hey, well, I want to get to IDEXX and MU and all these other names. I'm a little behind here, but we'll try and get to these. What up, D-Tish? Joey will look. Oh, I love Shopify. Yo, Shopify is a beast of a company. So here's Taiwan. We'll look at them. Here's Taiwan Semiconductor. They are cheap. The forward PE is a 24. So they're trading at 24 times next year's net income. That's pretty fair for me. And it's like Nvidia with a higher yield. They have a 1% plus dividend yield. If you didn't know, Nvidia just designs the chips. Taiwan Semiconductor actually manufactures them. And they actually just completed their first ever Blackwell chip in their Phoenix, Arizona fab. Apple increases A19 orders from Taiwan Semiconductor. Taiwan Semiconductor secures major government subsidies. So plan includes $65 billion investment into Arizona fab and $100 billion for additional facilities. They're desperately trying to do this because most of the Nvidia chips, literally basically all of them, are manufactured in Taiwan, 6 feet away from China, and that's a big issue. That's why the government's taking a stake into Intel. We couldn't be manufacturing independent if we wanted to. So Nvidia is going to move some of their manufacturing to Intel. But I like that Taiwan Semi is spending so much on their Phoenix, Arizona fab, and the first ever Blackwell chip was just produced there. But anyway, let's convert the currency from Taiwan currency to USD. Yeah, they make these 5 nanometer, 2 nanometer wafer chips, largest market share. Here's the market share, 71% market share. But they print money. Like, it's ridiculous. They made $14.8 billion of net income this quarter. After they paid over $2 billion in taxes. That's insane. And their net margin is a 45%. That's what they're netting. So you go spend $100 on one of their chips. They keep $45 of that after paying taxes. So the revenue's up 35, net income's up by 44. So that means they grew their net margin. So it's just everything here's heading in the right direction. A great never sell stock with a good dividend. So like they're Taiwan's like actively rejecting, like companies are going to Taiwan to say, hey, can you manufacture our chips for us? Taiwan's saying, no, we have exclusive rights with Nvidia. That's part of Nvidia's moat, which is actually so fascinating that they're like the only one that, like, we just don't have the supply to make the chips, and Taiwan Semi is the best to do it, and they're committed to only working with Nvidia. So that's another part of Nvidia's huge moat. So, all right, let's keep going here. is wait. Um, okay. INPOY. I hope I can find this one. So we can find this one actually. They're at sadly like an all-time low right now. Let's see if we can figure out what happened here. Okay, so I don't actually know what currency that is. Is that Korean or I don't know, but we'll convert PLN to USD. Or let's see what revenue. So Poland. Okay, I'm dumb. Yeah, I should. So this is a Poland play, I guess. That's where most of the revenue comes from. Let's see what they do. Well, first off, this might explain why the stock is at an all-time low. Just at a quick glance at their numbers, these are not good net income numbers. You know, the net income's down 32. Last quarter was down 55. It was down 25. But the sales are growing. Like the revenue's up 57, but the profits are flat. Let's see what they do. Just management of e-commerce enablement platform. It provides delivery, fulfillment, and two-door delivery services to online merchants. So, kind of like an eBay fulfillment kind of thing, but internationally in like Poland and stuff. So, if you wanted to ship stuff to the country of Poland, maybe you go with them if there's a growing e-commerce play there. I don't know. Interesting little one, but they're at an all-time low. If I was going for a e-commerce play, I really love Shopify. Wix is actually pretty decent here. What's the PE? So they are expensive. You know, they traded over 100 times net income. It's too expensive for me to pay. But Shopify is the stock that deserves to be doing this well. Absolutely. Check this out right here. I used to have a Shopify store. Even if you pay for their highest tier subscription, you literally have to give them 0.25% of every single sale you do. So you're basically just collecting a royalty every time something's sold through Shopify. But check out their annual revenue growth. This is what justifies that high multiple. Every year, every quarter, it just hits a new record. And that's what I love about that. And they're beating on expectations. They beat on revenue. They did have a little one-time adjustment to the net income. Like this quarter and 2 quarters ago, they didn't lose net income that quarter. So you basically just look at the operating profit to exclude those little adjustments. But the operating profit, these year-over-year comps are so good. 40, like they're basically making 400 million net income a quarter, which is 1.2 billion net income. So yeah, certainly still expensive even on a generous multiple, but I love that stock and they certainly deserve a high multiple. Also, Kathy Wood owns that stock. If you go to the Kathy Wood portfolio right here, her largest holding is Tesla and her second largest holding is Shopify. Pretty cool. Okay. Do you help people invest? No, or well, in terms of I just talk on streams, but no, I have no course book. I don't coach. I literally sell nothing, absolutely nothing. So please watch out for people impersonating me. I'll never follow you, DM you. Like someone said, did you just DM me? No, that wasn't me that DM'd you. If you hit the follow button, you might get followed by someone impersonating me. So yeah, just watch out for those people. But thanks so much. If you guys want to hit the follow button, I really appreciate that. We stream every single day. This is our second stream of the day. Okay. How do we, let's see here. Lead said, someone mentioned KRUS. Let's check out this stock. Actually, I didn't get to that one. Let's check it out. Kura Sushi USA. It's like a restaurants company. What's this app? But yeah, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there. So this is a $550 million company. They're actually the same price as they were back in 2021. So let's go figure out what they do. So company-owned restaurants. So it must be some kind of sushi restaurant. No one's going to believe me, but I've never had sushi in my life. And I've kind of want to try it, but let's go look at their numbers though. I am curious because a lot of restaurants are struggling right now. You look at Wendy's stock, Chipotle stock, Cava, Sweet Green, Jack in the Box, Krispy Kreme, all these stocks are in the toilet right now. But it looks like this company, and this was real, they actually made $2 million of net income this quarter. The revenue was up 20%, and for the first time ever, they made net income, like real net income. So are they expecting to keep up that net income? So no, analysts are expecting them to lose net income the next 2 quarters, but certainly interesting there. Kura Sushi income statement. I don't know about this one. Yeah, not making any net income. If I was going to buy, like here's Wendy's stock. Again, all the restaurants are really struggling hard. Wendy's lower than they were in 1997. Same with Jack in the Box. They're lower than they were in 1997. Krispy Kreme too. So it's, but if I was going to buy the dip on one, first off, McDonald's, Yum Brands, then Chipotle is an interesting one because Chipotle's finally at a somewhat okay PE, 28 PE. Yeah, they just continue to gap down every single time they report earnings. But what I like about Chipotle is it's a little bit safer because they print net income. They actually make 300 to 400 million of after tax net income a quarter. So that's great. Do you like Blue Owl? What's their ticker symbol again? That's a BDC. I actually don't. I like Blue Owl as a play to maximize your dividend income. I don't like it as a stock if you're trying to outperform the S&P 500. And again, here's the stock price. It's the same price that it was in 2021, which is actually pretty good. It's the same price that it was in 2021 while returning you 5.7% of your money back every year. Actually, they've been raising their dividends. So this is like a lending company. I believe Blue Owl was the one that led the bond raising for Meta's like Prometheus $100 billion data center thing. Actually, for the first time ever, this is another thing. Meta has for the first time ever, a net debt position. And Meta's being questioned for their AI spend. I still think Meta's a good buy the dip on though. How's the market doing? Yeah, Meta's up 1% right now. But they're like a lending company. Okay. Yeah, consumer is definitely slowing down. We can just see that from all the earnings report, well, Target's a bit more, but Target, Chipotle, Procter and Gamble. So let's see here. Like a lot of like GDP might be negative if it weren't for all the AI spending craze on infrastructure and chips right now. You said you should make videos teaching what you look for in stocks. Oh, hey, yeah, Ook. I actually do have a video of, well, I basically call it how I analyze a stock, and basically that is how I choose a stock. I look for companies with amazing financials. So yeah, by the way, I saw nothing. The only thing I do have is a YouTube channel. If you want to support me, best way to support me is just subscribe to my YouTube channel. But I have a video called how I analyze a stock. How much longer will we be live for? We're going to be live for well over another hour. Yo, I didn't even see that. Yo, Isaiah. Shout out to the homie Isaiah. He left a freaking hand heart. Oh my goodness. Is Isaiah still here? I can't believe I missed that. Isaiah, hope you're having a great Sunday. I might need to DM him if he left. But though, thanks for those gifts there. So would you buy Taiwan Semi? I would. Don't forget to hit the thumbs up. Hey, R Hunter, thank you, homie. Hey, so yeah, what up, Looney? Great to see you. We will be live for, well over another hour. So let's look at some more stocks here. Yeah, if you guys got any stocks you want me to look at, let me know in the chat here. So IDEX is the best healthcare, especially for pets, also in buybacks. Yeah, let's check out their stock right here. So this is IDEX Laboratories. So congrats if you own this one. This stock is at an all-time high. A lot of healthcare names have just been on fire. Johnson & Johnson hit an all-time high. AbbVie's at an all-time high. Eli Lilly's at an all-time high. HCA Healthcare is. So a lot of these healthcare names are booming. And this one specifically, they have this companion animal group. Lots of people would like, oh, I forgot the Zoetis statistic that they have, and it's so good. Like, would go into debt and to take care of their pet, or like last expense. Like, I don't know. But anyway, companion animal group, it's growing nice double digits, but it's really the margin expansion here. Let's see here. So revenue, oopsie. If you go to the revenue over here, the revenue's up by 13%, but the net income is up by 18%. Last quarter, it was up by 44%. It was crazy. So if you go to the net margin, 25% net margin, but look at this net income. They're making we'll call it 300 million of net income a quarter. That's probably what it's going to be the same time next year. 300 million of after-tax net income a quarter. And they spend it all on share buybacks. That's what I love about this stock. If you look at the top here, they're doing 200 to 400 mil on share buybacks a quarter. So the net income is up by 17.9, but the net income per share is up by over 21.4 because the share part of the ratio went down. Okay. Wait, why is that? Okay. All right. Raise stock. Oh yeah, we got to get to Oracle too. Netflix. Oh wait, no, we got to look at Netflix first. Yo, thanks again, Isaiah, for that gift there. I hope you're having a great day. If you got another stock you can look at, let me know too. So Isaiah said Netflix stock. I actually love Netflix. I love everything about Netflix. I love their business model. I love the company. It's an asset I want to own. It might just still be a little too expensive, but I think it's worth starting to do that slight nibble on right now. Like super, super small position now. But as it falls 5-10%, that's when you start to really buy more, as it really gets to a more fair multiple. But this stock absolutely deserves a 40 PE just because of how great they are. If we go to their net income right here, they're easily making $2 to $3 billion net income a quarter. A lot of people would cut like their Netflix subscription last. I love that because they have 300 million premium subscribers. The Super Bowl was just on Netflix, and I watched it on Netflix, and it was having like issues, I remember. But yeah, their ARPU, their average monthly revenue per user is $11.69. So they had a little one-time tax adjustment from backed up Brazilian tax. They've never paid Brazilian tax in their life, and they just had to pay it all, 620 million this quarter. But now they can do business again. Anyway, Netflix, I love them. Certainly would add them on the watch list. What app is this? Yeah, hey, again, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there. Or you can just type it into Google, just a broker called Moomoo. Yeah, it's my favorite one. So yeah, here's Ferrari right here. This stock is one I've been slowly buying the dip on. I really do like Ferrari. Hey, we'll look at ATO and INTR. What up, Charlie? Good to see you. So here's Ferrari right here, 34.8 times next year's net income. So starting to get to a pretty fair multiple. I'm a believer that if Ferrari, if their input costs go up, like inflation costs on the metal or whatever, Ferrari out of all companies has the ability to raise prices on their cars. Like they have more pricing power ability than like any other company because the people who are buying Ferraris are just don't care. Like they have so much backlog of orders. Let's go look at their numbers right here. This is what I love. We go to their net income. They're easily doing 400 to 500 million of after-tax net income a quarter. That's after they paid 130 million of taxes. They kept 450 million of net income. They also pay you a 0.9% dividend, so basically a 1% dividend. They bought back over 1% of the company in share buybacks. And check this out. The orange line is what the analysts expect. This quarter, they beat on revenue. They beat on EPS. They beat on EBITDA. So I just like this company. So I decided to start them out as a small position. But in this market, with how the market is, I didn't full size position. I'm being so patient. I'm being so disciplined. Like I want to own 10 shares of Ferrari eventually, but it's 3 today because I got to be slow here. So ATO, let's check this one out. So this is Atmos Energy. This is a $28 billion company with a 23 PE, and they're pretty much at an all-time high. I believe this is just a utility company. Let's go check this out. So distribution, pipeline, and storage. Maybe not. Looks like the revenue is at a record on the year basis. 100% of the revenue comes from the US. Yeah, check out this net income and the net income growth. Like, check this out. Just these year-over-year comps are great. 175 mil in net income. I mean, this quarter was 485 mil, and that was real. That was after they paid 120 mil of taxes. So they're actually printing money every quarter, and these are real metrics. They pay a dividend, and on top of that, you get a 1.99% dividend yield. Payout ratio is probably even lower because that's off the last full year. That doesn't include the past 3 quarters with these incredible double-digit growth rates. So the payout ratio is roughly like 25% lower than that. So they've done great, probably just benefiting from the whole AI demand. So hey, let's do Oracle right here. Oracle, people are seeing it as like an open AI like short proxy. Let's go look at some news here. So Oracle takes on 38 billion additional debt. This company has over like 140. Well, actually, whoa. If you add this now, they have a lot of debt to pay. And here's the thing. If we go to let's hope that they're spending this debt because they know they can get a massive return just from this AI infrastructure because they have a massive backlog. Like their backlog just randomly. The reason they gapped up so much on earnings day is because their backlog gapped up the 300% quarter over quarter from a large customer. Like OpenAI, I think it was. But yeah, if we go, this is a cloud storage business, basically cloud play. In my opinion, they have a really small market share. Number 1 market share for cloud is AWS. Then it's, it's AWS, Microsoft Azure, then Google Cloud. Yeah, Azure, I think Azure Cloud is second, not Google. But those are the top 3. And then Oracle has like a 4 to 5% market share. I believe Oracle has like a 5% market share right now. But if we go to their net income right here, so that being said, I'd rather pick Amazon or Google. I'd rather pick Amazon at their current valuation over Oracle's valuation, which is, let's see, current valuation is 38 times PE. That might not be ridiculous. 38 PE on Oracle, that might be fair, but Amazon's at like a 29. But yeah, check this out. This company makes just over they're making over $3 billion a quarter. So 3.2 billion of net income a quarter. They make 3.2 billion of net income a quarter, and they also pay a dividend. That dividend cost 1.4 billion. So they're retaining 1.6 billion of net income a quarter. Again, we just saw they issued another $38 billion of debt. They already have a ton of debt and liabilities. So they're I don't like this with Meta. Meta has now a net debt position for the first time ever. It could be like the best thing ever, not a good thing, because there could be so much demand that stocks just go higher. We could just rally into the end of 2030. Um, okay, I'm so behind here. I'm so sorry. We got to get to like GE, PayPal, Microsoft. So are you doing the charting or does the app do it? Yeah, hey, that wasn't me who did any of the charting. Yeah, the app when we were looking at Ferrari. Yeah, I didn't draw that. No way. Hey, Daryl and Man HQ. Thanks for those roses there, those gifts. Yeah, hey, if you got a stock you want to look at, Daryl, I got you. So here's Inter & Co. The forward PE is a 10 and its current PE is a 16. So the net income is supposed to grow like 40% or well, let's check this out. A $3.6 billion company. Oh, it's a Brazilian company. So that might explain why the multiple is just inherently low. But let's convert the currency to USD just to get a better picture. So they're a banking company, banking and spending, Intershops, investment, insurance brokerage. So yeah, if we go to the revenue, it says 100% of the revenue comes from Brazil. So that might explain the multiple. But these are impressive year-over-year growth to their net income. I mean, net income's up 40% after grew 130, after grew 500. So yeah, they're making like 250 mil of net income a year. And yeah, the PE's yeah, that's a pretty cheap valuation, but it might be because of uh, the country. But all that aside, I do like those numbers and I do like the net income growth. I don't know what their mode is. I also like NU. They're another, this is actually a crypto bank out of Brazil. And this one's actually cheaper, a 20 forward PE on NU Holdings. And they're just as impressive, actually. 92% of their revenue all comes from Brazil. This is a crypto bank out of Brazil. That's where people actually use crypto for transactional purposes because we don't in the US, but they really printed these sort of similar year-over-year comps. And it was way higher though. 780 million net income, and that's in USD as well. Pretty crazy on NU. So let's check out Microsoft, and we'll get to GE Aerospace. No one's ever gonna hurt GE Aerospace. The government can let them go bankrupt, and there's just no competition for them. GE is a great never sell aerospace stock. Just repairing, they're like the best and only. They're to like repair commercial engines and private engines, and okay, for aerospace craft. So here's Microsoft right here, a phenomenal buy right now. Not financial advice. They're up 0.4% in the overnight market, but Microsoft has a forward PE of a 29, or its current PE is a 33. They're trading at 29 next year's net income for Microsoft. Mag 7, the AI toolkit of the future, the company that the company that every company uses, I should say. You know, in one way or another, everyone uses Windows or these products right here, or their office products, their software, they're like cloud. Their Azure cloud is really big as well, but their office suite products like Word, PowerPoint, all that. And then yeah, their Azure cloud actually just took 1% market share away from AWS. It's incredible. That's over 100 billion a year for them as well. They just beat on every expectation every quarter. They beat on revenue, they beat on EPS, they beat on EBITDA. They're printing net income, legit 27 plus bill of net income a quarter. That's after paying 9 bill of taxes. So I might actually look to buy Microsoft because I don't own them right now. And I really, 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 that's a stock I want to own and never sell and just diamond hand till the end of time. Because invest in what you know. And Windows, I love them. Copilot, and it's kind of like some of their things are losing to Google, but they own Xbox, they own Minecraft. Okay, so let's get to GE Aerospace right here. Let's see, is there any news down here? Weekly news. Major Middle East airlines signed strategic engine deals with GE Aerospace. No way. So this deal includes maintenance services and spare engines. So that's pretty interesting. Oh yeah, the administration met with Saudi Arabia person. That's what this is. Or in Dubai, wait, right here. GE Aerospace announces $50 million investment. Oh, let's just go look at the number. Anyway, So actually, let's look at the forward PE. Their current PE is a 38, and they're trading at 36 times next year's net income. So a 36 PE, a forward PE, might still be a slight bit expensive, but they're so worth looking into. Commercial engine and services, that's up 26% year over year to a new record. They also have their defense propulsion tech, that's also up 26% year over year to a new record. And check out how they're beating on these expectations like crazy every quarter. Massive beat on revenue, massive beat on EPS, which is net income, and massive beat on EBITDA. Triple beat. The sales were up 23% year over year, and the profits were up 86% to what was 2.15 billion in net income. So they made 2.15 billion net income. Let's go see how much the dividend cost. The dividend only cost 383. The dividend only cost 383, and how the cost of the dividend go down from the previous quarter. They're also doing a ton of share buybacks. If you look at the top here, they legit spend 1.8 to $2 billion on share buybacks every quarter. I mean, that's pretty impressive on GE Aerospace. So let's check out BBAI. What up, Daryl? BBAI, Big Bear AI. I haven't really found too much value in this name. I don't know anything about it, really. I know they have like one Southeast Asia data center contract for the future. What is the future growth? Well, let's go see what it is. So analyze 35 mil. Well, look at this. This is one thing that isn't great at first glance. If you look at the revenue year over year, the sales, it's down 20% year over year this quarter. Last quarter was also down 20% year over year. And dang, did they make? So they lost money this quarter. Last quarter says they lost 200 mil, but the balance sheet still rocketed up higher because they were able to dilute you by 335 mil, and dang, by 300 mil last quarter. Not one I love because the sales growth did just go negative, but I think they have some sort of contract, Southeast Asia data. Oh, let's check it out right here. Revenue decreased due to lower U.S. Army program volumes and government contract disruptions, impacting top-line performance. Cash position strengthened to a record high, enabling strategic acquisitions like Sage. So remember how we just saw they diluted you by 300 million this quarter and 300 million last quarter? Maybe it was a smart move to acquire Sage. See, like I wouldn't know any of this stuff. I don't know much about this company, but hopefully that was some sort of helpful. Not a stock I'd probably have as a meaningful or big size position, but okay. How can I invest my life savings into this? Well, hey, I just buy the S&P 500. That's what I say. The thing is stocks are not get rich by Tuesday. Stocks are, you just want to get 8 to 10% a year with the S&P 500. And that slowly compounds and builds your wealth. So you turn $100 into 110, and then 110 into 129, and then 129, and it just snowballs higher every single year from now on. And you as you reinvest the dividends, so yeah, here's my dividend-only portfolio. We haven't done well. We're up 12.3% year to date, but we haven't done good in this portfolio. All time, I love being fully transparent. Also, I want to do a quick portfolio update too, see how the market's doing. But we're only up 9.3% all time in here. Let's see, is anything down on the day? Disney's down a little, but looks like the overall futures are really green right now. So market should be green tomorrow. Yeah, our Robinhood portfolio as well. Look at Google. This is Google's new all-time high. The last previous all-time high was 306. It's at 308.8. So crazy. Okay. Oh, what up? Looney said Polaris. Is that P or PII? Sadly, I think this one doesn't have good financials. PM, yeah, hey, let's look at PM. They're really doing great because of the Zen thing. So here's Polaris right here. This is a car manufacturer. They own Jeep, Dodge, and unfortunately, it's just not a good business model because the margins are so low. This stock is the same price that it was back in 2011, sadly. Well, let's go look at their numbers. So off-road, on-road, just see net income. So yeah, look at this. This is just not good. They've lost net income the past 3 quarters. Or wait, no, this is Polaris. Dude, this is Polaris. They're not the people that own Dodge or Jeep. That I don't know why I just said that. I'm just slow tonight. That's the other company. But okay. Anyway, but these are the small little like 3 tire things, I believe, like the Polaris Polestar things. I don't know, whatever. Looks like they used to look at that. So if we go back to 2023, 2022, if we can get back to this environment, that'd be great. They were making 100+ million net income a quarter. It looks like for some reason though, they're actually losing money every quarter now. So that might explain why the stock is not doing too well. And I think hopefully they don't pay a dividend. Windows is trash, planning on being more trash, or like the operating system, or I don't, better than Linux, or okay. PayPal. Oh, I forgot to get to APLD earlier. Yeah, so these are all kind of the same. If we go over here to the Nvidia portfolio, Nvidia takes stake in all these companies because Nvidia wants them to do good and they want them to buy more Nvidia chips. But Nvidia has a stake in CoreWeave, a stake in APLD, and a stake in Nebius. There's also Iris Energy out there. What are all these companies? These are all just a bunch of companies with a bunch of data centers. Literally a building with a bunch of GPUs in it and servers. There's no real moat here, but their moats are the strategic like partners they get. Like APLD, I believe, has a major part. They have a major partnership with CoreWeave, I believe, one with like Microsoft. They're a data center hosting business. I believe they used to mine Bitcoin, but let's go check out their numbers right here. So yeah, data center hosting is 59% of the revenue. Their HPC hosting business is 40% of the revenue. They beat expectations really good last quarter. Look at this. Analysts expected 45 mil. They did 64 mil. They expected them to lose 13 cents. They only lost 7 cents. So it was a good quarter. This industry, this is like a high beta Nvidia. Whenever Nvidia is doing good, they do. They're in the long run though. They're in the long run. They're really the bag holders because of how the depreciation they have just from the value of the chips. Because in 10 years from now, the value of a Blackwell chip is zero. Well, actually, to be fair, my GTX 1080 is like 10 years old and still running strong. So who knows? But okay, favorite stock you don't own? You know, every stock that was my favorite, like for the longest time, literally, I watched Comfort Systems for years. Like before, like I've watched Comfort Systems back here. This was my favorite stock, and I finally, after a long time, got into it at a good price. But I don't really know that I don't own. Actually, there's probably like Palantir maybe, but Palantir I like way too high of a valuation though. Good question. I'll think about that. Yeah, hey, my bad there, Looney. Polaris, Stellantis. Yeah, same thing there. He loves Shopify, HCA. Dude, HCA is, I actually finally bought them too. I couldn't resist it. I bought them at an all-time high, and I didn't even regret that either. I literally bought it on November 12th. The day it hit an all-time high, I bought 4 shares at 463. And luckily, if you guys noticed the past week specifically, a week and a half, with Eli Lilly boosting to an all-time high, all the healthcare names are at all-time highs. Johnson & Johnson's at an all-time high. Eli Lilly, AbbVie, just HCA. They're all, the healthcare industry is booming right now. Like the ETF, I think had like the highest inflows ever or something. Or the RSP too. Actually, look at the RSP. This is actually very fascinating. This is not going to include last Friday. And look at the volume. It's kind of hard to see. Highest volume candle ever on Friday for the RSP. This is the S&P 500 non-market cap weighted. So each stock in the S&P 500 have the exact same 0.3% weighting, and they were up 2% on Friday. What was the actual market up on Friday? I don't know why this matters, but S&P was up 1% on Friday, so they did double as good. Oh yeah, Duolingo. I love Duolingo. SoFi. Hey, let's do SoFi. Free me, yo. No way. Good to see you, homie. Kdu is in here. So here's SoFi Tech. I own SoFi as well. I love to buy more SoFi, but at a much lower valuation. I regret every share I've ever sold a SoFi. So with Robinhood, some of my biggest regrets are actually selling out of trimming stocks I love more so than having a major loss. So here's SoFi Tech. They're still expensive, 41 times next year's net income, even after this kind of dip that they've had. But this is the kind of stock that deserves that sort of multiple. Check this out right here. If we go to their financial services specifically right here, this is the bank growth factor. This is nuts. The revenue's up 76%, after grew 101, after grew 140, after grew 280, after grew 290. Like the growth, you can't make that up. No analysts were expecting that, and we can see the analyst expectations down here. This is the orange line. Every quarter they beat on revenue, they beat on EPS, they beat on EBITDA. They're now, I just think really people are taking SoFi serious. I made 140 million net income, and I do own them. And that being said, I wouldn't own them as a major size position, or not. Again, certainly not at this current price. Okay. I want to get to Duolingo eventually. Hey, what up? Excessive leak. What up, dude? Let me get to. I'm so behind here. VEEV. Hey, 6 star. I want to remind me to get to RVMD. How do you feel about Amazon and its current valuation versus Meta? Dude, I love Amazon. They're, I think, like a 29 forward PE. We'll get to them next too. So here's Viva Systems. So this stock, a $40 billion company, something just happened on Friday. They fell 10% on Friday. They reported earnings. So let's go see what those earnings were. They must have they clearly didn't excite investors. So they beat on their revenue, they beat on their EPS, and they beat on their EBITDA. So it was a triple beat quarter. So why did the stock fall? I don't know, but normally it's because they lower their guidance. Normally that's what you see in those sort of situations. But this looks like a subscription model company. I love subscription model companies. This is great double-digit growth. It's at a record 659 mil this quarter, up 17 after 19 after 9. So I like that. What is the net income? And that's really good. They're making phenomenal net income, and they have a phenomenal balance sheet. Let me really put this one back to the top of the watch list. The more I look at this, the more I like this story. There is a bit of dilution here, but is that to buy assets? So yeah, it is. Wow. So they spent basically $1 billion the past 2 quarters buying something. So that's why the assets went up. Let's see how much cash they still have. So they can easily afford to do that $1 billion acquisition because they have $6.64 billion of cash and absolutely no debt. And that $6.64 billion of cash is earning them interest of, where is this right here? Is that 72 mil of interest? Yeah, because that's how much that, because ISRG has the same amount of cash and earns the same amount of interest. So yeah, that's insane. That's why if you go to the operating profit was 240. This does not include the taxes, and the net income is 236 because this doesn't include the taxes and it doesn't include the interest you make on your cash. And the net income does. So this is the after-tax number, and it adds back the positive interest that they make. So that's why the operating profit is nearly identical to the net income. That's so insane. What's the net margin on this company? 30% net margin. Free cash flow is growing like crazy. I got to look more into what this company does. It just says subscription model company. I don't know more about what they do, but certainly numbers I like. Industry cloud solutions for global life science industry. So let's pull up Amazon right here. I am a shareholder of Amazon. They're in if you look at the top left, it's called our buy and never sell portfolio. I deem Amazon a phenomenal buy and never sell stock. It's worth buying. Literally, if you have the intention to never sell Amazon, it's worth buying right now. Hey, I just bought another share back here. Every time I buy a share, you can see exactly where I buy it. But Amazon, the current PE is a 31, forward PE is a 29. That's what I love about Amazon. Like, it's crazy. But check this out right here. Yeah, if we go to where the revenue comes from, like this is an ETF in one. 39% of the revenue comes from their online stores like Amazon.com. Then their third-party seller services. They handle all the logistics and take high fees for that. And the most valuable business is AWS, their cloud play. They're the number one cloud service provider. Triple the size of Oracle in terms of market share for cloud. They are the number one cloud service provider. If we go on an annual basis, I mean, it's well over 100 billion, or now it's going to be over 130 billion of annual revenue a year for them. They also have they're an advertising play with Twitch and Amazon. They're a subscription model play with Amazon Prime, physical store, grocery store play, real estate play, AI play, drone play, robotics play. Just literally ETF in one, never sell, innovative machine. If we go to how much they're spending on new assets every quarter, 20 to 40 billion a quarter. Amazon doesn't pay a dividend and they don't do share buybacks, and that's what I like about Amazon. Because they spend it. You don't want Amazon as competition. So they're a beast. Like literally the day they announced their expansion to 1,000 new cities of their same day delivery, Instacart fell over 10% instantly. And Kroger did too. What's Oh, it's Cart. Okay, it's Cart. I'm just slow. There was this. It was this day right here. I remember it. It was this day right here. No earnings day, but that was the day Amazon announced expansion. What was that right there? There was a little technical. What was that? A double bottom. The rise probability is 86%. Well, there you go. What app do you? Oh yeah, if you want to get this little brokerage I'm on, it's where you buy stocks on. It's in the link tree in my bio, that very first link there. It's an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks. But yeah, you can just type it into Google though. A broker called Moomoo. Yeah, I think Amazon. It probably, I don't know if it's fully bottomed or I can't say a confident bottom, but the valuation, the risk reward is fair for a great company. It's, as Warren Buffett says, buy a great company at a fair price rather than buying a fair company at a great price. It's worth going the extra step for buying the quality name. I didn't believe that at first, but then I realized it's true. I wanted to find exposure to the nuclear industry. I looked at all the nuclear names out there, and then all the other ones do terrible. Well, then there's some good second places like VST, but I looked for the best nuclear play out there, the best utility, the best rental company, the best AI company. Like I just look for the best in every industry. The best real estate royalty company, really restaurant stock is McDonald's because they're really a real estate royalty play. My favorite healthcare play right now is HCA. My favorite REIT of all time, I've looked at all the REITs out there. Well, Iron Mountain's in some water with the short interest report. That's why they're down 18%. But this is my favorite REIT currently, Iron Mountain. So, okay, let's look at some more stocks here. Futu. Hey, actually, I love Futu. Oh yeah, someone in chat said that. Yo, I am so sorry. I'm behind on the YouTube chat here. But yeah, if you're on the YouTube stream and want to get this app, it's actually in the link in the description. If you're on TikTok, link tree in my bio. So let's see here. Yeah, and this app I'm on right now is publicly traded. This app I'm on right now is ticker symbol FUTU. Yeah, let's check it out, Smokesy. So Futu or Moomoo, this literally app I'm on right now is them publicly traded. And even if this company were to go bankrupt, you're still FDIC insured for $250K. So you're good. But this company is printing money. It's good to know that the brokerage you're trusting your assets with are doing great as well. They literally made $413 million of after-tax net income this quarter. The sales were up 86%. The revenue was $822 million. Out of that $822 million, $413 million of it was after-tax net income. So their net margin was a 50. The net margin expansion is crazy. It was right the past 2 quarters. It aligns perfectly right when they added in crypto to the platform, and they've really been pushing people to buy crypto because they like give you rewards for doing it. But yeah, they make a bunch of fees from brokerage commissions, like up 90% year over year. Interest income is up. Oh my gosh, that gap up is nuts, up 79%. So yeah, here's how that works. It's smarter than like if you could look at the middle of my screen right now. This app gives you a 3.65% APY on your idle cash completely for free. And then your idle cash, food to the company, they give you 3.6%. They actually earn like 4.2%. They pocket the difference and collect it. Anywho, that's why I love this one. This app is completely free, no cost, no commissions, no monthly fees, no hidden fees. If you want to get it, again, link tree in bio there. So let's see here. Next stock. Ben, this one's a little weird. Hopefully I can find it. PRYMY. Primian. Okay, let's go find out what this company is. It's a European company, so weird ADR, but let's go judge them off their numbers right here. So yeah, this is an industry you really want to be in right now. Electrification, power grid, transmission. So let's go see. Wow, the revenue expectations are very good. Revenue is going to go from 4.3 to 5.9. Whoa. And the EBITDA is supposed to spike up as well. So there's some really good future expectations. They just do an acquisition or something to get that? No. The revenue's up by 16 and the net income's up by 163. So something, was that real? No. Okay. So yeah, but the core business still grew 20% last quarter, or the profits grew 20%. Last quarter's up 50. So they still deserve this. What's their multiple? PE, there is no forward PE because there's no analyst covering this one, but they're trailing 12 months PE is a 20. That might be fair. That might even mean that's the kind of stock that will probably continue to climb higher. I wouldn't trim or sell them. If those analysts are right and that PE is right, that's actually real impressive. Best quantum stock, that'd be Google, Microsoft, IBM, Honeywell. I'd stay away from like the trashy ones, like the RGTI. I don't know who would buy this, but this is it's a $7.8 billion company. I know so many companies like Powell Industries with a $3 billion market cap, Dave with a $2 billion market cap. Both of those companies make real over $50 million of after-tax net income a quarter. Well, here's Riggedy Computing with no sales. The revenue is $1.9 million. It's down 18% after it fell 23. They lost $200 million net income. It's just pure momentum. And you buy RGTI. You pick you want to find the quality. Okay, let's see here. I can only see max 10% returns here from Spotify. Should I sell Spotify for Uber? I think Uber is a great one. I think Spotify is good too. Spotify is worth owning for the long run, but the valuation, the risk reward doesn't look great on Spotify simply because even after this little dip that they've had, they trade at, 45 times next year's net income. I'd actually, honestly, look into Netflix too. I'd rather buy Netflix than Spotify because Netflix is starting to look decently attractive, matter of fact. But all these stocks really trade expensive. Spotify, Life360, Netflix, they all just kind of trade expensive. Yeah, Spotify's a cool one, but they don't actually own their music. UMG, Universal Music does, and they give them royalties and licenses, but they still print money now. So, oh yeah, RVMD. Let's get to this one. So this is Revolution Medicines. Check that out, all time high. Um, what is that? On- I don't know what. Um, I don't know what that is. Some sort of treasure box thing on TikTok. I don't know how to do that, but anyway, let me know on the TikTok stream what that is. That treasure box thing. Anywho, let's keep going here. Revolution. Uh-oh. Revolution Medicines. The stock is at an all-time high. The company is worth $13.7 billion. They're at an all-time high. Let's go figure out what happened here. Did they get no, they don't. So let's go to revenue down here. So revenue is they have no revenue. Yeah, look at that. So if we go to the revenue right here, it says zero. It was zero this quarter, zero last quarter, zero the last quarter. So it's a revenue-less company. So there must be in some yeah, they're in clinical stage. But I'm guessing why is maybe the stock doing so well? I don't know, but maybe there's good news around FDA approval. I don't really know. But to be honest with you, I would not really trust with a lot of money with this one because they're, oh, that sucks. That's actually really bad. What's the market cap of this one? They lost 300 mil this quarter, 250 mil, 200 mil. That's well over $1 billion in net income. Well, the whole company's worth 13 billion. So they lost 114 to the entire company in the past year, but it looks like they can afford it because the balance sheet's pretty good, but the balance sheet has leveraged up. Probably from dilution. Yeah, dang. That's how they keep fortifying that's how they get this little spike up in assets every time after it keeps going down is by a quick $1 billion dilution. So they diluted you by 30+% just since 2023 of all the shares. And again, no revenue yet. I'd be careful just for those reasons, but the stock's done great. Like all that bad news said, the stock's done phenomenal. So let's do Duolingo right here. I'd look into this one as well. Hey, what up, Ben? So Ben said PRYMY, Wires Data Centers. Hey, thanks for that. Yeah, let's see here. So this is Duolingo. This is your subscription model play, and it's a language learning app. If you're trying to learn English, or actually, I think most of the revenue comes from outside U.S. or Atlanta. I don't know. Yeah, okay. So yeah, rest of the world is 58% of the revenue. Their number one thing is other people trying to learn English. So basically, if you want to learn a language, you pay for Duolingo subscription, their language learning app, and you learn it a great way. But one reason that Duolingo is kind of collapsing right now is because of the AI thesis. OpenAI just came out with a language learning app kind of similar to it that doesn't cost any money. So maybe it's pressing in the future fear of like people are no longer going to have to pay for this commodity of just learning a language. I don't know. I think Duolingo is still going to be fine. And I would actually look into buying the dip on this one. That being said, sadly, it might be at a fair price right now because looking at its forward PE, actually Duolingo deserves this, a 38 forward PE. So Duolingo trades at 38 times next year's PE. I believe it's still a little pricey, but here's what I love about Duolingo. Again, they're a subscription language learning app. Their subscription revenue, AI hasn't hurt them yet. These numbers are phenomenal. Revenue's up 45, after grew 48, after grew 47, after grew 56, after grew 43. So they're on a streak of growth. And if you don't pay for their subscription, you see ads. So if you go to their advertising revenue, that also is up 45% to a new record. They triple beat this quarter. They beat on revenue. They beat on EPS. They beat on EBITDA. But maybe it's them getting back down to a more realistic valuation with the new, like they deserve a high valuation, but it's that high valuation is being slightly lowered with this new AI, maybe going to hurt them in the future, uncertainty. But that 38 forward PE is pretty fair to nibble on them right now. Honestly, I'd nibble on Duolingo very smallly right here. Not major size yet because the risk to reward isn't amazing yet, but I think it's to nibble. I think it's decent. Seems pretty good. Hey, again, none of this is financial advice. I don't sell anything. I have no course, book, WhatsApp. Watch out for people impersonating me. I'll never follow you, DM you. Only thing I do have is a YouTube channel. If you want to support me, best way is just sub to my YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. So let's see here. SSRM. Let's check this one out. So this is SSR Mining. I haven't heard of this one before, but they've done great. They reported earnings this day and have just done great ever since. Let's go check it out. So Marigold, Puna, Cripple Creek. So Victor Gold Mining Company. So this, I believe, might just be a company that owns a bunch of gold mines. Yeah, a gold company with assets. Yeah, so four different gold mines is what they said they own, and the price of gold, as we know, has done phenomenally. So yeah, check out the growth rate the past 2 quarters, up 120, up 50, and the net income is super positive the past 3 quarters. Yeah, they made 57 million net income after they paid 40 mil of taxes, or like 38 mil of taxes. So good balance sheet. Um, uh, they haven't kept up with the actual price of gold. So maybe I'd recommend IAUM over this one. It's literally just the commodity of gold in an ETF, but that's interesting there. So, hey, what up, Eric? What's going on with the market? A great week overall. Should we be worried? Actually, usually on these weeks like this, like tomorrow or this week, we only have 2 full trading days. Usually there's just no traders, and historically, like it's same through the end of the year with Christmas and New Year's. Historically, there's always a Santa Claus rally because there's just no sellers on those order books. So uh, we're already grouped with S&P is up 0.39, tech heavy QQQ is up 0.6. So hey, Google's up 3. Go check your portfolio. Maybe you're green. Probably are green. So let's go. Let's look at some more stocks here. Yo, hey bro, need your opinion on crypto treasury companies. Yo, give me a ticker symbol. Crypto treasury company. Oh, like BMNR or something. This is like the company that owns a bunch of Ethereum. I would rather just own the core underlying asset, or like, oh, like a MicroStrategy. MicroStrategy, yeah. I'd rather just own actual Bitcoin. For sure, I'd much rather own actual Bitcoin than MicroStrategy. Um, I don't know why. I don't own any Bitcoin. I love getting exposure to crypto via the brokerages, via Robinhood, Webull, Futu, who make hecka money every time someone does a little transaction in crypto. They're like the picks and shovels play of it, and they're the picks and shovels play of the prediction market. So I love all three of these stocks: Futu, Robinhood, and Moomoo, Webull. Okay. Not as major size positions. I actually just bought some more Webull stock in my Robinhood portfolio. I got so many different portfolios here, but yeah, Webull. Ooh, how are they doing on the day? They're up 0.84, not too shabby. Innodata's up 4. Let's go. Okay. Can you analyze? Oh, um, I'm so behind here. Luffy, hey, remind me to get to ARGX. Eric said, what do you think of jumping on the CART? Is it a good play for the long term? You know, we were actually just talking about Instacart. If you hear what I said, the reason this stock tanked to this day is because they're new. Like I would rather own Amazon than Instacart, but the Instacart's at a dog cheap valuation. They traded 18 times next year's net income, and they have no debt. I think or no net debt, fortress balance sheet. Let's see what their interest is. Yeah, they're making 16 million in positive interest from their net cash position every quarter, but their moat might be still eroded away by Amazon, who now Amazon, the day they announced the same, you can now in over 1,000 new cities have this ability now. You can have same day delivery of your groceries, which through Amazon, and you probably cost less than doing Instacart. I don't know, but they're certainly interesting because numbers are great. Or well, the sales were up 10%. Might be a little slow. Yo, AFIQ, dude, heck yeah. We'll look at ACAD. I'm so behind on stocks, I do apologize. We're going to be live for another like 40 minutes to an hour. So don't worry. I'm so sorry if I missed some of these, but thanks again for the roses. I want to get to the people who have roses first. So we're going to get to ACAD after this. And then, the other one I saw. Okay. So here's ARGX SE. So let's see what they're a $56 billion company. And 86% of the revenue comes from the US. What does this company actually do? They're a biotech company, global immunity, but they are headquartered in the Netherlands, in Amsterdam. So they're headquartered in the Netherlands, just like Novo Nordisk. So, wow. Whoa. They're at a massive all-time high. I know healthcare is doing amazing. I didn't really zoom out on their chart and realize they're pulling in Nvidia. Well, let's go see what these numbers are. So we can see what the analysts expect. Check this out. So that's the orange line. They beat on revenue, they beat on EPS, which is net income, and they beat on EBITDA. But notice the trend, how it's just a straight line up. The EPS projections are going to go from 230 to 7. 7 of EPS annualized. What's the forward PE on this company? A 31. I mean, it might even be lower than that. That PE after they had this crazy stock price appreciation. Yo, congrats if you own that one. If I own them, I probably wouldn't even sell or trim them. So let's get to ACAD. Hey, thanks again for that gift there, AFL. So, oh, another pharmaceutical play. Yo, so this is Acadia Pharmaceuticals. So this stock is the same price that it was in 2013, sadly. They're a $3.9 billion company. So they sell Nuplazid or Nuplazid. Probably saying it wrong, but here's the growth of that. It's up 11% after 10 after 10. How about this other one? Debut. That's up 10% year over year. So let's go see what the analysts expected. They beat on revenue. This might have been an adjustment, but they beat on EPS actually, and they beat on EBITDA by a good chunk. So they triple beat. Revenue's up 11. Net income of they made okay. So that was a one-time adjustment. They actually only made around 29 million net income, but that's still good. That's 100 million net income a year. Well, forward PE. So yeah, that's the thing. That is at first most glance, people would see the PE of 15 and say, hey, this is a pretty fairly valued healthcare company, a 15 PE. But then when you realize the numbers are slightly fudged and they're actually trading at 41 times next year's net income, it might start to get a little expensive. Even though it's the same price it was in 2014, it might still be a little expensive at a 41 PE. I don't know. I wish I could give you more thoughts on them. Hopefully that was helpful there. Okay. Do you believe we are in the beginning of the slow deflation of the AI based on the? I don't know yet. I feel like not yet. We still got a year or year and a half maybe. Hey, what up? U.S. politics global thoughts on Google? Yeah, Google is a phenomenal never sell stock that I do own. It's tough, but it's at an all-time high this second right now. Its previous all-time high on a previous trading day was 306, and it's 308 or it's 309 right now. So Google's at an all-time high. Wow, we're up 90%. I can't believe a Mag 7 we're going to double in such a short time. Unlike Meta, dude, Meta's done terrible. But yeah, Google's a great never sell company. If you have the intention to never sell Google, it might be worth a nibbling here. I wouldn't make it a big size of your position yet, but I certainly heavily watched Google. I certainly heavily watched Meta, Microsoft even. Yeah, I heavily watch Microsoft right now because they're on a steal of a deal. Uber, I think, is pretty decent. Viva Systems, pretty decent. EME, MCore is pretty decent. These are all the stocks that we analyzed just on this stream that I found pretty fair valuations. So yeah, hey, okay, okay, we're behind. Okay, I'm sorry here. Do you own any Mag 7? Yeah, I own Meta. Google, do analyze on Meta? Okay, we actually haven't looked at Meta today, so I'll do Meta real quick. I love everything about Meta except at how much they're spending in on AI right now. Meta defends 72 billion AI infrastructure investment strategy. So yeah, investors are quite. If we go to the cash from investing activities down here, and this is all being spent on like chips and stuff, but they're spending now 20 to 25 billion of net income a quarter on new assets every quarter. It used to be way respectably less, 6-8 billion, but now 20 to 25 billion. Meta can easily afford it, but that's just what investors aren't too happy with because that's actually more net income than they make every quarter. They make 20 bill of net income a quarter, and they're spending more than that on AI right now. But Meta is saying that we need to spend on it because it's an existential threat. I think they only said that because Meta recently just won the case of they're actually not a social media monopoly literally last week, and they said those words at the thing that AI is an existential threat. And but anyway, like with TikTok was a big thing for them. But anyway, yeah, another reason the stock fell is the net income fell to 2.7 billion, but this was from a one-time adjustment. You actually look at the operating profit, it was a record Q3, 20 bill of profits, first ever $50 billion revenue quarter. Cash from operations was a record 30 billion, up 21%. The company prints money. 40% net margins. Instagram, Facebook ads, legit print money. And I love the Meta Ray-Ban glasses. That's kind of what they're spending a lot on AI right now. They're certainly losing on LLMs. Google right now is the winner. Google literally is now OpenAI. They've beat OpenAI at their own game, have a better model. They've integrated it better. Pretty crazy. I'm up over 100% on Google. Heck yeah, Suzuki, man. You deserve it too because you didn't sell before today. Yo, what up, Ravenfly? How's it going? And Eric, the Blaze. Good to see you. I can't wait for the AI bubble to pop. I know, because then we get to go buy the dip. Okay. Yeah, I don't know what all that treasure box stuff was, but if anyone knows on TikTok what that was, yo, hopefully you guys enjoyed that. I think it like gives you guys a bunch of coins or something on. It gave like 500 coins to you guys or something. So that was pretty cool. Okay. Um, okay. What is the most important thing you look at? Well, there's so many things I look at when evaluating a company. Like you got to blend so much stuff together, like the moat, the valuation, the metrics, the industry, the Moomoo's good for investing. Hey, what up, the Confide? Yeah, energy stocks, Southern Company. Yo, they own Georgia Power and Light. I love the Southern Company. This is a phenomenal utility company. They have with the super safe dividend. If you look at the dividend, you get a 3.3% yield, and it's super safe. On top of, they have a 3.3% yield. This stock chart doesn't even include the stock price appreciation. Or I mean the dividend. It's only the stock price appreciation. So anyway, I love Southern Company. They make great net income every quarter. They're a regulated utility, so they're not able to raise prices on customers without the government's approval or the state's approval. They're the third largest utility. First one is Florida Power and Light. Then it's or NextEra Energy, who's mostly Florida Power and Light. Then it's Constellation Energy. This is my favorite utility stock of all time. CEG. It's worth buying even now because of their Calpine acquisitions. Going to instantly add $2 of yearly EPS, which makes the forward PE at 27 now. Number one nuclear and geothermal play in the U.S. This company literally owns 30% plus of all the U.S.'s nuclear reactors. They're the best one. They have the best dividends, the best buybacks, the best acquisitions. Like, look at this. You get a 0.45% dividend, but only 11% payout ratio, and they raise the dividend every year. So, and that payout ratio is going to go fall by another, based off the PE ratio and how much the net income is going to grow. Anyway, Southern Company, I didn't mean to like switch the topics. Like, I love Southern Company. Actually, that is my favorite regulated utility, Southern Company, more so than NextEra Energy. So if I was looking for the best regulated utility, SO stock for sure. Google taking over Nvidia market cap. I think Google might be, actually, it's not going to show it in the overnight hours, but yeah, Google and Microsoft. Whoa, Google is worth more than Microsoft. Like, isn't that nuts? Like, Google, I don't know, just maybe it's just me, but yeah, Google's worth 3.6 trillion. Like, wow, they deserve it too. They really do. Someone said, "Hey, this is a recording, by the way." Hey, what up, Oh Hollow? This is, you can see the time in the top left. It's definitely not a recording, and you can see the stock of anything live. Go check Google stock for yourself. It says 920. See if it's 920 for you. But yeah, so multiple people said, "Yeah, this is a recording." Hey, this definitely not. Maybe I sound like AI though, and I'm sorry if I don't get to every chat here. Someone said, Lamb Research, let's do that one. So Lamb Research right here. Wait, LCRX, isn't that? Wait, LCRX. I think you mean Red Notice. Let me know if you're talking about Lamb Research there. I can't. What's the ticker for that one? So thoughts on Roblox here. Let's look at Roblox right here. If this is true, there's some really interesting stuff about Roblox if it's true, but I still can't invest in the company because they just burned through a ridiculous amount of net income that's super unsustainable. But check this out. Here's the reason I like Roblox, but I still wouldn't invest in them. If we go to their daily active users, the daily active users are 151 million, when this exact same time last year, Roblox had 88.9 million. I don't know if this is on I don't know what happened specifically from last quarter to this quarter that caused 40 million new daily active users. That's something I question if it's AI bots, but that's super impressive if it's true. And it might be true because if you go to the revenue, it grew very nicely. The sales grew 47%, but here's the bad news. Here's unfortunately why I wouldn't buy Roblox, and this sucks. And I really want to see them narrow this. Like, by the way, I'm watching Roblox to see them narrow this, but they just for eternity just can't. They just consistently lose more and more and more. But yeah, they just burn through 250 mil of net income a quarter, like $1 billion a year, and they're a bit leveraged, but it's because really of their stock-based comp. Their free cash flow is positive, but then you add the stock-based comp and it's super negative. So we really just want to see them finally make some real profits because they lose $1 billion a year. The whole company's worth 62. Well, that's 1/60th of the company. Not too big of a deal, but hey, Cyan said your streams are the best. Hey, I appreciate you, man. Yo, if you guys want to hit the follow button, we stream every single day and every Sunday, this exact same time, every single Sunday. And, every day as well. Not at this time. Only on Sundays we stream at 8 p.m. because that's when the market opens. So yeah, every single Sunday at this exact same time we stream. And by the way, I saw nothing. I have no course book, WhatsApp. I'll never follow you, DM you, nothing like that. Please watch out for people impersonating me. Yeah, crazy holiday market schedule. Only 2 full trading days. Like I've never seen so much words here. So yeah. Um, can we look at your list? Maybe we can follow. Yeah, I don't really, or like my watch list, I don't really have too intriguing watch lists. I have a safe, never sells, my hidden gem watch list of some stocks I really like. Zero debt companies. Every stock in here has no debt. Just because they have no debt doesn't make them a good company. Like, I don't know, Pinterest, or actually Pinterest is pretty decent because they print net income from their cash pile. But yeah, Reddit, Yelp, Pinterest, DocuSign, every stock here, Instacart has no debt. Hims and Hers used to be on that list, but then they added debt and we had to remove them. So, okay, LRC, wait, hold on. Let's actually get to this one instead. What would you buy? I want to buy Nike. Well, hey, actually, so this right here, if you look in the top left, this is called our buy and never sell portfolio, where once we buy a stock in here, I try not to ever sell it. But one stock I used to own in here that was considered a never sell, I thought was Nike. But I sold out of Nike. It's not a stock that I want to own for the long run. I don't think this will keep up with the S&P 500, sadly. After doing a lot more research, it was more of an emotional attachment I had to Nike. So I had to remove that. I don't like their numbers anymore, sadly. So if we go to the revenue right here, it's up low single digits, up 1%, after it fell 10%, but the sales are up 1%. But the net income is down by 30. And that's not some one-time adjustment either. Like the net income really fell 30. What does that mean? That means the margins are being squeezed. Net margins are down to a 6%, down 32% after the margin fell 20%, after it fell 3%. So like the margins are, just from tariffs, inflation, whatever. And the gross margins are down 7, net margins are down 30. And plus they pay a dividend. So it's not the end of the world for Nike, but I just not a growth story I want to be in right now, in my situation. Invest in Sears, invest in Enron. Those are some good ones there, Looney. Toys R Us, I heard, was a really good one too. Okay. Hey, what up? Jesus. Hey, what up, dude? Happy Sunday. Let's see here. Coinbase. Let's do Coinbase right here. So Coinbase, that's actually another Cathie Wood play, I believe. What's so interesting about Coinbase is they just copied what Robinhood did. I don't think it's gonna be down here, but Coinbase, make strategic acquisitions, Echo and Vector platforms. Echo has 200 million in funding, 300 million projects. Solana-based asset. Well, anyway, Coinbase. Oh yeah, it's right here. Number 3 right here. Coinbase develops prediction market. So right now, Robinhood stock, Webull stock, they're all printing money. Well, not Webull yet, but Robinhood's printing money from this prediction market stuff. Because whenever you go buy and sell a stock or do crypto, they don't. Well, actually, crypto. I don't know about Coinbase's fees. Robinhood makes quite a bit on crypto transaction fees, but they don't make much money on stock transactions. I don't know about Coinbase's crypto transactions. So they really are maybe going to make a bunch of net income in the future from this prediction market stuff on Coinbase now. The revenue's good on Coinbase. This is great growth. Revenue's up 55. They made net income. They're kind of like a Bitcoin proxy. They should kind of rhyme with whatever Bitcoin does. Let's actually go compare that. I am curious to see how do they perform exactly. So Coinbase versus Bitcoin. Yeah, as we can see, the chart, if you line it up perfectly, you look at that. I mean, nearly a perfect match. So from when you compare them, anyway, honestly, Coinbase is interesting for that prediction market stuff. So, JFIN. So sorry, I forgot some of these. So this is Jaya Yin, or Jaya Yin Group. So a very small one. They're worth $390 million. And they're sadly the same price as they were back in 2019. Let's go see if we can figure out what happened here. So this is a Chinese company. So we're going to convert the currency from Chinese yuan to USD. So revenue from loan facilitation. So some kind of like Chinese lender company. Yeah, 100% of the revenue comes from China. That might be why the multiple is just so cheap. But check out the net income. And that's real. They made 72 million net income after paying 18 million in taxes, and this is in USD. So the past 2 quarters had some really good growth, like surprisingly, like before today, the growth was like slowing, but did they like buy a company or something? I don't know, but something happened the past 2 quarters. If it's organic, that's phenomenal. So anyway, the numbers are actually decent, but they're Chinese, and I don't know. I really don't know. The PE is a 1.7. So they're trading at one or basically 2 times net income. If they decide to pay a dividend, that would be smart because the yield would be so high for like a 5% payout ratio would be like a 2% dividend, which just is crazy. Okay. Can I see your buy and never sell? Oh, hey, by the way, if you guys want to see a whole portfolio update, I make a million stock portfolio updates on my YouTube channel. And at the beginning and end of every stream, I do a total stock portfolio update. I have so many different portfolios here. Like I have my Robinhood dividend only portfolio, and wow, um, eh, up 0.91%. Expect the markets to be green tomorrow. Look at the Qs. No way, up 0.75. The S&P is now up 0.5. This is crazy. Let's go check our Webull portfolio real quickly. What's up on the oh, here's us year to date, but how are we? What's up on the day specifically? So UiPath, Robinhood, is up 3, Clear Secure, Progressive, and Pfizer. Yeah, the kind of defensive names, your insurance stock, your healthcare play, they are slightly down as they kind of, I guess, should be if tech's rallying. Or I don't know. Okay, let's go look at some more stocks here. Ishwar, Dell is looking pretty good. I might sell Supermicro to buy them. And as much as I love Dell, I wouldn't have it as a major size position, but certainly a little size position is definitely worth having, I think. So YK said thoughts on UAA. Is that Under Armour's class shares? So super sad. We just looked at Nike stock. We saw Nike stock was lower than it was 7 years ago. It's not specifically like a Nike problem, or well, maybe it is, but we see this with the whole industry. Like, look at Under Armour. This is a sad story. Under Armour is the same price that it was in 2006. Now that's a bit depressing. Let's see if we can figure out what happened here. So yeah, the revenue is down 4.6 after it fell 10, after it fell 0.6. Okay, so the revenue growth is gone, and there are no profits. For the past 4 quarters, they've lost net income every quarter. Do they pay a dividend? What am I clicking here? Dividends, they no dividend on this one either. Yeah, I wouldn't buy that one, Yeah. Lululemon as well. I don't know if I would want to buy Lululemon with how we're seeing a consumer slowdown. Consumers are a little frisky right now. I like the pricing power stocks like a more Ferrari, but like I don't know. We're seeing Procter and Gamble, Target, Ulta, Elf, or with so many of these like discretionary, Etsy, like a lot of stuff is having a slowdown for the consumer, but okay. But Lululemon does still make a lot of net income every quarter. FRSH, hey, what up, Con? Let's check this one out. Wait, FRSH. So this is Freshworks. Have not heard of this one before, I don't think. $3.3 billion company. Looks like they're at an all-time low. Is there any apparel brand that's killing it? I don't think so. What's that? I think, is it Decker's Outdoor? Maybe we'll check that one out. But this is FRSH. This is a subscription service and software license play or company. And check out the growth here. This is what you want to see. This is actually really impressive. Revenue's up 15, after grew 23, after grew 19, after grew 38. So that's at a record. Yeah, actually, that's weird. Let's see. So they're beating on revenue for the past 3 quarters by a good margin. They're beating on EPS every quarter. And they're beating on EBITDA every quarter by a wide margin. Then why is the stock still struggling? I mean, that's weird. I mean, let me see. Oh my goodness. What do I keep clicking here? What exactly did they do? Let's see here. They're in the DeepSeek AI beneficiaries portfolio. New product launch on uncomplicate your IT and customer service. Oh, so maybe some sort of look at that. It looks like Disney and S&P Global are customers. If we just judge this company for their financials, it's good. I like their numbers. Let's see what the forward PE is. So the forward PE, okay, so yeah, it's still it might be fairly valued at this price because I can't do a net income multiple on their market cap because they're not expected to make net income for another year. But this is a significant narrowance of losses. They used to lose 20, 30 million a quarter. they lost 4 mil, 1 mil, 1 mil. Like at narrowing your losses at this rate, they're going to be net income positive probably the same time next year. But if we go to EPS, and first off, EPS are probably wrong, their analyst expectations, because every quarter they significantly beat by a big margin. So maybe they'll actually make net income faster than analysts would think, but it might be fairly valued at their current price. Jesse said REKR, Recor Systems. I've actually not heard of them before. What's their market cap? Oh, very small company. So this company's worth $219 million. So that's a small market cap, $219 million. What do they do though? They are in they're a technology company, provision of roadway intelligence and data-driven mobility insights. Well, hold on. What is that? Artificial intelligence. Okay, are they like traffic lights, AI traffic cones? Websites, something to do with AI something. So let's see what their numbers are, because that's kind of what matters. So we go to revenue down here. So the revenue this quarter was $14 million, not much. But out of this 14 million, this is actually really good news. They only lost 4 million in net income. I actually was expecting them to lose a lot more, because back here, actually, this is still not good. Remember this in the back of your head. Kind of think about this. The whole company is worth $219 million. Remember that. They're worth $219 million. And back here, when you lose 20 million, that's 10% of the entire company. But they only lost 4 mil, 8 mil, 10 mil, 20 mil. But if you add up all these losses that they've had in the past year, they've lost like 20 to 30% of the entire company's market cap and net income, which probably explains why this stock is at an all-time low. Sadly, are they diluting you? Probably not, because it's at, well, I wouldn't trust them with a lot of money. Thoughts on ExxonMobil with the whole Venezuela situation? Well, hey, shouldn't the Venezuela, or actually, I don't know what that situation is actually, but any sort of geopolitical fears, oil supply chain issues, like Russia sometimes goes out of their way to target oil supplies change, because a lot of their economy is oil and they make more. So I am a believer that you should own a little bit of oil, some kind of oil stock, but never as like most of your portfolio. You want to have it as a small diversification asset. Exxon's a great one to buy and never sell, because war fear, inflation fear, currency fear, all that, oil does good in those times. But oil, historically, and it never will, ExxonMobil and all these stocks will never outperform the tech-heavy S&P 500 that returns 8 to 10% a year. Like we can see Exxon is like really not up crazy from its like 2007 price. It was 88. Now it's 120. Like, think about that. Since 2008, the stock went from 90 to 120. But at the same time, every single year, you've gotten over 3.4% of your money back in a dividend. Again, this chart doesn't include the reinvested dividends. I don't like looking at the reinvested dividend chart, but 3% dividend yield plus hopefully 2% stock price appreciation every year, probably 5 to 6% total return. Look at Artesia and George. Hey, give me I don't know what that is. If you give me a ticker symbol, I can find that one. Someone said Riot Games. Hey, I'm not going to pick on Riot Games here, but I've looked at every single Bitcoin mining stock out there. Hut 8, Core Z, CleanSpark, Hive, Blockchain. So I'm not picking on Riot here, the Marathon. There's not a single Bitcoin mining ETF or Bitcoin mining stock out there that has actually come even close to keeping up with the actual performance of Bitcoin. So there's really just not a scenario where I'd recommend like a Bitcoin mining company over Bitcoin over the long run. But as you can see, sometimes it can outperform in the short term, or just as, anywho, it's just like a Bitcoin high beta proxy, or not even, I don't know. But okay. I know a lot of these like companies like Iris Energy, they've converted from Bitcoin mining companies to data center hosting, which is actually pretty interesting. Iris Energy, is there any news around this company? Oh yeah, so look at this. They're still mining Bitcoin. So look at this. Their total revenue. So their total revenue this quarter, with revenue with 240 million. So the total revenue this quarter was 240 million for Iris Energy. But did you know Bitcoin mining was 232 million of that? So 232 mil out of the 240 million revenue from Iris Energy is literally Bitcoin mining. So They're slowly converting though from basically at the end of the day, Iris Energy, CoreWeave, Nebius, Sterilabs. These are all just a bunch of companies that are data centers. There's a company that owns a bunch of data centers and GPUs, and they now can maybe make a higher return on these GPUs instead of mining Bitcoin by data center hosting, cloud hosting, servers, all that. So it's like a transition right now we're seeing, but not one. I love the sales growth on Iris Energy. Not when I keep meaningful money in though. Hey, what up, Jimbo Jack said UFPT. So UPF Tech. Where's my water? Oh, I'm out of water. Okay, UPF Technologies, they're a $1.7 billion company. Actually, the forward PE is at 22, so they're expected to grow their net income another like 10%. Well, let's see here. They're well off their peak of 350. Let's see if we can figure out what happened here. So they sell products. So the growth rate did slow down, only 6% this quarter. Did that meet expectations? Or so actually, yeah, they beat on revenue this quarter. They beat on EPS and they beat on EBITDA. So it was a triple beat quarter. We go to net income. The net income is just low though. They're doing 16 million of net income a quarter. What are analysts expecting for EPS though? Actually, EPS is supposed to go to 220. I mean, they are beating every quarter. So, 70 million net income a year, $1.7 billion company, 25 PE. I don't know. I got to learn more about what this company actually does. What kind of products do they sell? Components of sub-assemblies, packaging, and well, let's check out their website. TPI to expand film and thermoplastic molding capabilities. So maybe some sort of like manufacture. Okay, hopefully that was helpful there. 4,300 employees they got. Or it says they're in medicine, so I don't know. So there you go. Those two are ATZ.to. Hey, what up, Zoli? Good to see you, man. Oh, how about Iris Energy? Oh, yeah, hey, we just looked at Iris Energy. Yeah. So this is actually ATZ stock right here. Wow. You're right. This stock is at a major all-time high right now. Congrats if you own this name. They're a $12 billion market cap. You said they're in the apparel industry and they're Canadian. So we're going to convert the currency from Canadian to USD. So actually most of the revenue, there is 60% of it, although they're headquartered in Canada, 60% of the revenue does come from the US. What brands do they own? Or maybe we'll just click on their website right here and we can see what exactly it is that they own. Some sort of weather, clothed company. So let's go look at their sales right here. So the revenue this is great for an apparel company in this environment specifically with how Nike's numbers look and Lululemon's growth rate. This is really good. Sales are up 29 after it grew 16. And not just, the top line that's growing, but the bottom line, they're profitable. They made 50 million net income, 31 million. They made 50 million net income this quarter after they paid 16 million of taxes. So this is real 58 million net income. Net margins are probably lower. Yeah, this is what Nike's peak net margin used to be, 11-12% peak margin there. I wonder what Lululemon's margin is. Let's see here. What's their peak net margin? Net margin is a 15. So yeah, Lululemon is more, they have a 15-20%, right? Lululemon also is one, if you're going to buy the dip on one of them, Lululemon, I still wouldn't buy, but at least they make 300 to 500 mil in net income a quarter. Like they're still making a boatload of net income, but the growth is gone. Their North America sales were only up 1% year over year. Doesn't really beat inflation. They're losing their brand a little bit. I don't know. JFIN did pay a dividend this year too, was 10%. Really? I did not know that. Yeah, hey Jimbo, we were just looking at EME. Yes, sir. So EME is a stock. They're at like a 23 PE right now. EME is a stock I actually really recommend right now if you're looking for the HVAC or an MEP play, a mechanical, electrical, plumbing play. That's in the HVAC solutions too, helping out data centers. And look at this. Here's the crazy part. If we go to their net income, they're easily making 300 million of after-tax net income a quarter. That's after they paid 100 mil of taxes. They're making 300 mil a quarter, and they pay a dividend. That dividend only cost 11 million a quarter. and they made 300 mil of net income in just one quarter. They could pay for the entire year of dividends like times 20. Like there's so much room to raise the dividend. And since there's the dividend pay ratio is so low, what are they doing with their cash? They're spending like 100 to 200 mil a quarter on share buybacks a quarter. So they're just very shareholder friendly. Their most recent earnings report did slightly disappoint though. Comfort Systems is like basically their main competitor, way overtook them. Comfort Systems is a beast. I'd rather own FIX. Actually, EME trades at or I think I'd maybe rather pay the premium on 30 PE isn't nuts on FIX either. They're the crazy one. So, hey, yo, you doing some overtime today? Hey, yes, what up, Charles? Yeah, actually, every Sunday, we do 2 streams so yeah, this is the only day I really do 2 streams a day. But yeah, if you guys wanted to follow button, we stream every single Sunday this exact same time. Okay, so what are your top 10 buys for the long term? Well, top 10 buys, that's a lot of lists to go there. But yeah, Uber, I think, is good. EME, we just looked at. Here's some like safe never sells, Walmart. I need to add more to this list, but like McDonald's, Waste Management, like a stock that you can just sleep so well at night knowing is never going to go anywhere. Like people throwing away trash to Waste Management and HCA Healthcare. And okay, let's see. GPUs stock or GPUs or hyperscale data company. Well, let's check this one out. Okay, actually, we're not going to cover this company. I didn't realize this is an $80 million company, and this stock is pretty much at an all-time low. So let's go see if they deserve to be worth 88 million. I'm going to guess yes, but let's see. So here's the thing. The whole company's worth 88 million. Let's say you buy the whole company. You could buy the whole company for $88 million. Let's say you do it. You're buying a company that just lost 13.5 million this quarter. And it's 3 months before that, 17 million, 5 mil, 5 mil, 30 mil. So, and you have a ton of debt to pay. And the only reason their assets went up versus liabilities because they just diluted you by $50 million, which is, whoa, they diluted you by 40%. The stock deserves to be an all-time low. RIP. Yep. Wouldn't touch that one. It's always the numbers and the financials that explain why a stock is either at an all-time high or at an all-time low. It's either doing really great like Palantir at an all-time low like Lucid. It's always the numbers that explain it in the long run. And that's why we specifically look at like financials and stuff, because it's what's important to me. Like, and so someone just said SoFi. That's a great example. SoFi as well. SoFi, the reason the stock is doing so good, it's not just propped up on momentum. I think SoFi is just going to continue to be a winner in the long run. There's a lot of stocks out there, like a lot of the quantum names and some these like nuclear SMR startups like Oklo, they were just propped up on momentum with no financials to justify it and sustain that rally in the long run. But I think SoFi has that. I always look for companies that, are like, if you always want a company that's on a dip, you can still find, like, out of all the companies to buy on a great dip, just buy one that has great financials. Like if you're trading something based off RSI going down a bunch, like I would just buy and hold Sprouts Farmers Market for the long run. That's one I like. But anyway, getting back to SoFi right here, here's why SoFi deserves their high multiple. If we go right here to their financial services, specifically right here, they're a fintech. They have their own banking charter. It's up 76%. After grew 101, after grew 140, after grew 290. Like literally the growth rate is growing over here way better than the analysts thought. We can see the analyst expectations. They constantly beat on revenue, beat on net income, beat on EBIT every quarter. So pretty cool. Thoughts on Duke, a good play? Wait, Duke, is that a stock? Duke Energy acquired. Oh, I'm not gonna remember the name. Duke Energy acquired some. Okay, let's just go look at their numbers because I don't remember that. So it's $100 billion company. That's insane. 19 PE. Yeah, they're a utility business. So this 19 PE is fair. The industry average is an 18. They're at a 19.3. And yeah, these utilities are all in such demand because if there's a new data center in the zone, they're taking a lot of supply from the grid. And anyway, the regulated utilities, they need government approval to raise prices, and maybe they got that. The net income growth the net income is great. They're easily doing 1 to 1.5 billion of net income a quarter, and on top of actually the stock is pretty much at an all-time high. On top of it doing this well, you've gotten a 3.4% dividend So, 3.4% dividend, you get like 2 to 3% stock price appreciation every year. That's an 8% total return. You just want this whole industry. Also, like VPU, these regulated utilities, literally the government, if they don't, it's like a two-edged sword. If they don't make the money, the government gives them that money, but the government won't let them make more than a certain amount of money. So these utilities, the regulated ones, like they literally just return exactly like 7% a year, like no matter what, always. So you can just buy the VPU ETF and just sleep great at night, and get 2.5% dividends every year. So Aaron said CCJ. Actually, this is my favorite uranium play. I've looked at all the uranium stocks out there, and of all the uranium stocks that exist, Chemical has got to be my favorite pick out of all of them. And that being said, the valuation is pretty nutty. They're still trading at 51 times next year's net income, so it's still a pretty expensive valuation, but they are the best uranium play out there. If we go to their net income, it's really consistent versus their competitors. Actually, they didn't actually lose money this quarter. They actually made like 50 million net income, but they make consistent net income, which I do like. And you get a small dividend that they raise every year. So they're a uranium play. Let's see if there's any news up here. So uranium segment generated, wow. So hold on. Uranium segment generated, and this is in Canadian, 523 million Canadian, accounting for 85% of the revenue. So 85% of the revenue is the uranium business, but it was impacted by production delays at McArthur River. Okay. Operating cash flow rose sharply. Free cash flow surged 900%. Well, what was the free cash flow? Let's see. FCF, that's what free cash flow says. So 45 million free cash flow. Yeah, the free cash flow looks pretty good. Anywho, uranium play, you can also just buy ticker symbol URA. This is the uranium ETF, ticker symbol URA. And literally the largest holding in here is ticker symbol CC, is the Cameco company. So yeah, that's the best uranium play, and it's by market cap. So someone said, hey, Footy_M, dude, thanks for that gift. I didn't even see that. Yo, if you got a stock you might look there, I got you, Footy. Hey, Nathan, DubJ said, can we look at TRNS? Wait, TRNS. Okay, let's see. So Transcat, let's see. So they're a small company where they're worth $500 million. So that's a very small market cap. They're the same price as they were back in 2021. But let's go analyze them because I am curious. So they're a service company. Their service revenue grew nicely. It's up 20% year over year, and their distribution revenue grew 23% year over year. So both businesses are growing very nicely. 92% of the revenue is the U.S. Well, what is their? Well, let's go to their website. Trust in every measure, precision partnership. Okay, what do you do? Wait. It's an aviation company or like I don't know. Well, let's go just look at their numbers. So it would take me a while to find all the information you probably want to hear. So let's just look at their numbers. So the revenue is up 21%. There's a good growth. The revenue is 82 million, and they made $1 million in net income, 1.3 million net income. Now that did fall 63%, and it really did fall 63% year over year. But the fact that they're actually making net income every quarter is pretty good. Out of all the $500 million market cap companies out there, I'd want to buy the $500 million company making $1 million plus in net income a quarter, because that's 0.2% of the entire company every time they make $1 million. What app is he using? Hey, what up, Grand? Hey, by the way, this is actually a software, a brokerage where you buy stocks on. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, that very first link there. Broker called Moomoo. It's my favorite one. So Ben said BUD, that's Anheuser. So this stock, they sell a bunch of beverages, has not done well. If you didn't, actually, this stock is the same price that it was in 2010. So you bought this stock in 2010. It's the exact same price that it is today. I don't know if this is a US company. So yeah, they're actually headquartered in Belgium. So this is a Belgium listed company. The PE, what's the forward PE? Because that's what matters. So the forward PE is at 15, so that's a cheap multiple, but that's actually still way more expensive than their peers like a Molson. But this is still good net income. Check it out, like 1.5 to 2 to 3 billion net income a quarter. Yeah, let's see, operating profit. Yeah, so they really are making about 2.5 to 3. I mean, we'll just call it 2.3 billion of net income a quarter. So they're making 2.3 billion. Whoa. Altria, I didn't know Altria is the second largest shareholder. So if you own ticker symbol MO, you have some exposure to BUD because they own 8% of all the shares. So technically, like 8% of this net income goes back to Mo. Actually, that makes me bullish on Mo. I didn't know that. But check this out. Their dividend cost, ooh, oh, that's for the half. Okay, that's good. Because I thought that was quarterly. I don't, because they're Belgium, yeah, it's not going to show us the quarterly number. So have we been looking at, no. So the dividend payout ratio is 100% if that's correct based off my math. Well, let's see here. EPS, this was $2.46. What's the dividend? A dollar? Well, it changes every quarter. I don't know. That ticker symbol BUD, your drink beverage company. Hey, what up? What up, Luffy? He said Snowflake. Let's do Snowflake right here. Best stock at low price like Sprouts Farmers Market. Yeah, I really like Sprouts Farmers Market. But look at PRR. Hey, what up, Vish Hus? What do you do? Hey, we're just looking at stocks over here right now. Yeah, if you guys got any stocks you want me to look at, we'll analyze them for you. Actually, we're not going to be live for too much longer, probably like 20 minutes, but here's Snowflake. This is like Palantir's biggest competitor, and they actually just partnered with Snowflake as well. But yeah, if we go to their product revenue right here, this is what you want to see in a growth company. Like, this is great. First ever $1 billion revenue quarter. The revenue's up 31%, after grew 29, after grew 37, after grew 84. So they're on an absolute streak of growth. But one thing that does concern me a bit is the net income they're losing. They're legit losing 300 to 400 million of net income a quarter. Now, the losses, I guess, did narrow by 6% year over year, but that's why I wouldn't buy Snowflake yet, just because these are still a lot of losses. But again, they actually lost less net income than analysts expected and made more EBITDA, earnings before interest and taxes before. So anyway, Snowflake's interesting, but I don't like the net income losses there. Check out WN.to. Oh wait, WN. Wait, is that wait? Hey, let me know. Hey, secret is WN. Is that George Weston? We'll check that one out if that is. So PARR. Then we could look at Starbucks, Stream Crochet. Or hey, give me the ticker symbol. What's up, dude? For that stock, I don't know. We'll look at Palantir too. Yeah, Palantir's. I'd love to own that stock. So here's Par Pacific. I actually don't know what this company is. So they're a $2.2 billion company. They're actually at an all-time high. So hold on. Congrats if you own this name, because you got to be up on your position. What did they do? So refining, so some, I'm guessing, oil and gas stock. Let's check out the revenue growth. So the revenue fell 6% year over year after it fell 16. That's just because of the price of oil right now. If you look at Exxon or Chevron, they're seeing the exact same similar declines in revenue. But something happened this quarter where if we go to the net income, they used to like make really choppy net income back here. Like, look at that. But this quarter, they made 262 million of net income. That's after they paid 85 million of taxes. Like, they really made 260 million net income. Were analysts expecting that? So no, that's probably why the stock may be gapped up on earnings so much. The analysts expected $1.90. Well, they really did organically after paying taxes. Real numbers made $5.16. And we can see the EBITDA as well. The EBITDA was a 3x beat. The earnings before interest taxes, they expected 127. They did 330. PARR, pretty cool there. It's all perspective. Someone lost, someone's gained. Yeah, yeah. Oh, George Weston. Okay, WT or WN. Okay, WN, George Weston stock right here. So, this stock is at an all-time high. So, yeah, wow. Congrats if you own this company. And you got to be up on your position. A $36 billion market cap, but they're a Canadian company. So we'll convert the currency to USD just to get a better understanding. So this is a holding company that controls majority stakes in retailer Loblaw and in Choice Properties, a REIT, a real estate investment trust. Oh, Choice Properties, that's ticker symbol CHH, or Choice Hotels is. So they own a retailer. Okay, let's go look at their numbers right here. So they're headquartered in Toronto. So Loblaw. Oh, so that's 99% of the revenue. Okay, so this Choice Properties is, still $1 billion of revenue, but okay, revenue is up 1.84, and the net income is up 95. So they made 630 million net income. So I don't know what caused the stock to go up so much. Maybe is there an AI thing? I don't know. Anyway, actually, I gotta go. Are you buying the dip on Microsoft? I'm buying the dip on Microsoft and Meta for sure. Those are the two. I have to go right now. I'm so sorry. Actually, we'll look at Palantir, then we'll go. So here's Palantir right here. Actually, then I'll try and do a stock portfolio update. I hope you guys have a great rest of your Sunday. We're going to be streaming tomorrow. We stream every single day. We stream every single Sunday this exact same time. We already streamed for 3 hours earlier today. Then we did another. We've been streaming for over 2 hours today. We've been streaming for a long time. This is so fun. So here's Palantir right here. A great buy and never sell stock. I want to own Palantir. I probably will own Palantir one day if it gets to a normal valuation, because they're trading at 210 times next year's net income. Palantir certainly deserves a high multiple, but not this high. Go to their government revenue. Government revenue's crazy growth. It's up 55 after it grew 33, after it grew 12, literally to a new record. But most impressively is the commercial side, up 73 after 26, after 22. So the growth rate's growing. They're printing net income, fortress balance sheets. So yeah, hope you guys have a great rest of your day. Thank you all for being here. Hit the follow button. I sell nothing. Watch out for people impersonating me. I have no course book, Discord. Watch out for people impersonating me. Thank you again. Thank you to everyone on the YouTube channel. Sorry I have to go so abruptly. So hey, see you later, Balance, Fortis, Joe.